Good morning, everybody. Welcome back to another episode of the Market Open. It is Thursday, February 5th. We are live. Ugly day, once again, in the pre-markets. I think a lot of people expected today to be a little bit of even a sympathy reprieve from the ugliness of what we saw yesterday. We're going to go through a lot of charts and macro data around how ugly yesterday actually was, because when you take a look at the numbers, it's quite fascinating the way yesterday ended up turning out. And we're going to talk a lot about that. We also had Google earnings that we will talk about as well, as that was a pretty important earnings to look through. But, if you woke up in the pre-market even 2-3 hours ago, even, 30 minutes ago, it's not really getting better. And overnight, I think part of the reason why it's as bad as it is right now is because Bitcoin has hit some new lows for 2026 BTC. As of right now, we are officially below $69,000 or $70,000, was $69,300. And that has kind of been the proxy for all risk on assets that have not necessarily correlated with crypto, but are now starting to correlate with crypto in terms of the downside pressure. So, across the board, it is disgusting, ugly, whatever adjective you want to use. And some of the macro data we got this morning around the labor market was also not really good. It just to not sugarcoat it, it really wasn't good. So we're going to go through a lot of this stuff and kind of dissect how this is playing out and kind of why it's happening. But it's just ugly. Like across the board, there's really nowhere to hide. I think there's a shot we get a little bit of a bounce throughout the day, just because now it feels like the selling is starting to get overdone. Again, we're going to go through a lot of charts. And when I show some of these charts, it's going to be quite interesting to see how indiscriminate some of the selling has been historically compared to the earnings growth that these companies are putting up, compared to the RSI levels that they're trading at. But it is bad, to say the least. And as someone says right here, everything hurts. Everything hurts right here. HIMS is up right now pre-market because they came out with a copycat Vigovi pill for $49. So if you are in HIMS, I know it's been a tough year, but that stock is moving right now off of this copycat pill. I guess that's bullish for HIMS. Yeah, that's your logic for why HIMS is up right now. I wonder if they're going to get sued over this and they have to deal with more lawsuits, but yeah, HIMS is your safe haven today. That's up 10% off of a copy of a Vigovi pill at $49. All right, let's get into it. Good morning, good morning, good morning. Thank you, everybody, for being here. Again, I know it's ugly. I know it's not pretty. I've been feeling it. Everyone's been feeling it. I had a lot of phone calls yesterday with people that have also been feeling it. And feeling it is a way to put it lightly. It's a bloodbath, dude. It is a real bloodbath. And I want to go through a lot of the reasons for why I think there's a bloodbath today or how it's playing out. But, it's just not one of those things where we can point to Liberation Day. We can point to tariffs. I think, and once again, I will reiterate this. The worst thing about this is you can't point to anything. You can point to OpenAI. You can point to Kevin Warsh. You can point to these things. But like last time, it was very obvious. It was like, why are we tariffing, the entire world? It doesn't make any sense, right? And that was your reason for why the market reacted the way it did. Now it's like, we're pointing to AI being so good, it's going to wipe out trillions of dollars of SaaS market cap. That's what we're pointing to when the pervasive thought was that AI is a bubble and it can't be that good. Like, it is so confusing to see how the market is delevering here. And it makes you think like there's other things that are going on outside of like sort of the fundamental reasons of why we're seeing this correction. Not saying certain stocks don't deserve multiple compression, not saying that, high beta names that have been rallying like crazy that trade at 500 times sales probably don't deserve to come back down a bit. But when Microsoft goes down 10%, there's a deeper issue that's going on. And I think that's why we're going to have to discuss all the different elements of how this is playing out. All right, so let's get into it. First off, let's quickly just talk about Google, and then we'll keep going from there with all the other different stuff we've got going on. So Google crushed earnings. If you own Google, you should be pretty damn happy. I don't know where Google stock is at in the pre-market. Let me take a second look right here. Google HIMS, by the way, up 15% right now. Google is down 4%. So 10 billion token per minute, 325 million paid consumer subscriptions, 60 billion from YouTube ads, 750 million Gemini users, 17% year-over-year revenue growth in search, and 70 billion annualized cloud. Cloud is growing at 48%. 48%, folks. That is pretty incredible. Now, the reason I think the stock is down, and I don't even think this is a reason, but nonetheless, this is how the street is thinking of it. They are spending 175 billion of CapEx next year, or this year, 2026, versus expectations of 120 billion. This makes sense because they just did 48% cloud growth, and they're probably going to do a lot more cloud growth in the future, and they need the infrastructure to support that cloud growth, which means they're going to have to spend. So this right here is very bullish NVIDIA, very bullish Broadcom. Broadcom should be up in the pre-market as they are one of the key suppliers for Google's TPUs. Yeah, Broadcom, well, it was up 7%. Now it's up 2%. So the entire sell-off still affecting the names that should be benefiting. But this should be bullish, the semiconductors, no matter what. And it's not just Google. It is also Meta. It's also Microsoft. All of them guided for incredible amounts of CapEx growth. So the sort of broader AI trade thesis, that's not going away. Alphabet, 185 billion, Amazon, 146, Meta, 135, Microsoft, 105, Tesla, 20, Apple, 14. That's 605 billion of combined CapEx spend, most of it AI related from the biggest companies in the world. This is what you needed to see to understand or to have faith in the NVIDIA thesis and the broader thesis of the semiconductor trade not fizzling out. And so that's intact, yet the market is not necessarily happy overall. And I think that's why your NVIDIAs and AMDs, I mean, AMD took a 20% hit yesterday, basically 18% hit, worst day in about, I think it was 15 years for AMD, after beating earnings by 16%. So it's one of those things where, as much as I think Google should be higher from here, first of all, it's at all-time highs. Second of all, if you're putting up good earnings and you're not blowing them away, and even if you are blowing them away, the market's just not giving you that love. And CapEx could get revised up every quarter. That's correct, just given the amount that they're spending. And Google announced that they will be one of the first partners to implement NVIDIA's Vera Rubin platform. So, I mean, they're first in line to buy these chips, and Jensen is ready to sell it to them. Question is if the market cares enough to give them that momentum as well. Novo took a big dump yesterday because they guided for 13% negative growth. Wow, down another 8%. Oh, that's because of the HIMSS thing, right? Because of the Wegovy stuff. Street thought they would grow negative 1%. They ended up saying we might grow negative 5 to negative 13%. That gave it a dump. Then the earnings they missed, that gave it a dump. And now this HIMSS stuff, I guess that's giving it another dump. Cascading headlines compounding on each other that are leading it to get sold off here. All right, so Google crushed it. I don't know if this is a buy the dip. Quite frankly, I don't know if anything in this market is a buy the dip, but we're going to see when the market opens how badly they take it down. I really wonder if it's a Microsoft situation where they take it down 10%. I don't think it is, especially because Microsoft has more of the OpenAI headwind associated with it. But when the market opens, we'll find out how much the broader market / algorithms wants to diversify away from Google. Which, again, I don't think there's a reason in the print to do that. But time will tell in the next 30 minutes to see how the market thinks of it. Okay, let's go through some stats for yesterday and give you all a bit of an understanding of how bad yesterday actually was. Also, real quick before we do that, we should look at jobs data. So this is also very, very important. Let me also do the red and green poll right here in the chat so we can get that started. Let's put that here, green or red today. I think I know what most people are going to pick. Yeah, they took Meta down yesterday as well. Let's put that here. Okay, so job market data today was not good, and it was not good in two different ways. Let me just pull this up right here. So we have a private job reporting from Challenger, which was one of the third-party companies we looked at a month ago as well. And based on their estimates, this has been the largest month for layoffs in January since 2009. 108,435, highest January layoffs since 2009. New hiring plans for January, 5,306, the lowest total on record. Layoffs surged by transportation. UPS cut 30,000 jobs. Amazon cut 16,000 jobs. And 7% of layoffs they are estimating are directly attributed to AI. Wouldn't that be good news for rate cuts? Yes, that would be really good news for rate cuts. But we have a little bit of a weird Fed where just 2 weeks ago, Jerome Powell went on stage and said, we don't have any downside risk to the labor market. Mind you, 3 weeks before that, in December, the reason we cut 25 basis points was because he said we had an elevated downside risk to the labor market. And this is why I think when Trump gets mad at the Fed, he is somewhat justified. Because in 1 month, to change your entire opinion to say there's a massive risk to the labor market, we need to be afraid about this, we need to cut rates, and then 1 month later be like, labor market's fine. It's not that big of a deal. We can hold rates. And then you get this data and it's like, no. It looks pretty freaking ugly, dude. It's one of those things where it's like, no, we probably should have cut in January. And I'm not even so attached emotionally to the idea of cutting in January. But when you look at this data, it's like the Fed should have access to way better data than this and should be able to make the analysis that we should have cut. But they don't. And I think that's why monetary policy continues to be so confusing. And it has been so confusing over the past couple of years. Then you have the jobless claims right here that said 231,000 people filed for unemployment this week, above expectations of 209,000. Now, again, that's not recessionary level. However, it is still beating expectations. I think the private layoffs from ADP yesterday, which was also 50% worse than expected, and the highest amount of layoffs in January since 2009, those stats, when you put them together, it doesn't signal optimism for the labor market. And maybe those stats are an anomaly and maybe things will be okay. But when you put those two things together, it should signal maybe rate cuts are a lot more likely than not. The March rate cut probabilities were 10% yesterday. They're now 15.9%. Again, if we're too late to cut, then it's not really going to help equity prices. But yeah, maybe there is a better chance we get a cut going into March. On top of that, you've got gold and silver that got decimated last night. Gold right there down 2%. Silver down 10%. This is why I made up my mind on Friday and I got out of copper when I saw the 30% drawdown on silver. I think these assets could come back. I think copper could do very well. I just do not want to be a part of what feels like a clown show inside of commodities. I think if you were in it a year ago, even a couple months ago, you're able to hold on to those gains. It makes sense. Now I feel like you are literally playing with fire because all of the alternative precious metals, palladium, platinum, copper, etc., although they have very significant parts of their thesis that make sense, they're just a proxy for silver and gold. And if silver and gold are going up and down 10% in a day, it really feels like a clown show. These are not assets that should be going up 10% in a day. That's not supposed to happen. There's no earnings. There's no fundamentals. There are fundamentals, but it's so rooted in macro and liquidity and industrial use. That's not supposed to warrant trillions of dollars moving back and forth every day. That's not supposed to happen. And so the fact that it is happening, to me, this is just my thesis, and people can disagree. I think we are at a point where people are speculating, and that is only the reason why we've seen silver and gold rally as much as they have. I mean, we're fed this whole thesis that silver is in a shortage, yada, yada. And I think there's parts of that are true. But to see it go down 30% on Friday, then up 10% yesterday, then down 10% today, this is a joke. And I don't want to be a part of it, no matter if it goes up or down. So I think there's just a bigger risk now to speculating on those assets. But the fact that those assets are the ones that are getting speculated on, not your Rocket Labs of the world, which is also super volatile, but your silvers of the world, it's scary, in my opinion. That's something where I actually am just I'm not going to take a risk with any capital there. So we're seeing that happen in the broader marketplace. Obviously, we're seeing the SaaS carnage, and we'll talk more about that. But the jobs data, the Bitcoin collapse that we've seen over the past couple of weeks, since Warsh was announced, Bitcoin has been down 20%, and the gold and silver up and down rotation. I think you put all that together, plus the fact that this damn 10-year is not really coming down. We're at 4.236. We need to get below 4%. It's a bad situation all around. What is the bright line? The bright line is earnings growth is amazing. And we're seeing it across the board. I mean, there have been very few companies, if any, that have had such a horrendous earnings that actually have any significant weight towards the S&P or towards the broader stock market that we've talked about. Oh man, that looks like an issue. It's no, we haven't had a single one of those that really is concerning. And so I think the market's now trying to balance, okay, how do we deal with this narrative around the carnage of SaaS and Anthropic and all this stuff and gold and silver versus the fact that companies are actually putting up numbers? How do we price that in for the future? And I think that's why we are in a bit of a confusing spot in the broader market. So let's go through some charts yesterday to show how bad it actually was. The NASDAQ, here's the first chart, fell 2% yesterday. But more NASDAQ stocks went up than down. I'll say that again. The NASDAQ went down 2%, but more NASDAQ stocks went up versus down. The mega tech sell-off only happened 4 times before where you were in this situation. Last time was January 27th, 2025. And each instance was followed by more losses in the next 2 months. So the last time this happened, June 2002, December 2008, July 2024, January 2025, where the NASDAQ was down, but more NASDAQ stocks went up and down. That is a massive divergence of breadth. And it usually is followed by a bit more pain after that happens when you see that type of momentum to the downside, but only a certain few stocks actually creating that type of momentum to the downside. Then you've got this chart, which, I mean, we'll talk about software a lot today, but wow, NVIDIA will now delay its new gaming chip due to a memory chip shortage. Holy crap. That's from the information. Not sure if you can definitely believe it. Jensen might come out and say the opposite. NVIDIA, that's up a little bit pre-market. Where's Micron and SanDisk? Micron down 2%, SanDisk down 3% as well. NVIDIA won't release a new graphics chips for gamers in 2026 due to memory chip shortage, as per the information. Don't know if that's accurate, but I guess the memory super cycle continues to be in delay for a lot of these companies. That, you know, it's funny because a lot of the gamers are actually pissed off at NVIDIA because NVIDIA's kind of not dropped the ball on gaming, but they've just not focused that much on gaming because like they're making $200 billion a year on data centers. But it looks like they're going to piss them off again because they don't have the memory to be able to support that. So that's what you got for NVIDIA. That one right there, up a little bit in the pre-market. Memory stocks are also down right here as well. SanDisk down 2, Micron down 2. Okay, so the software chart. So IGV, the call volumes are coming in. People are trying to call the bluff here. Software stocks, IGV ETF, that is the ETF that comprises most of the software stocks that are down. Their call volume soared to a record high yesterday, 220,000. So, I mean, people are calling a bottom on software. I don't know if that's going to be the case. IGV down another 1% of the pre-markets. Microsoft is down another 2%. Wow, 405.50 on Microsoft. If Microsoft's falling, then I think pretty much every software stock is going to follow it. But I don't know. Do you think it's a bottom? Do you not like, are you calling BS on Anthropic creating all this pain? Is that a DeepSeek moment? Maybe, but that is also part of the carnage that we've been seeing. Then take a look at this chart. Capital is shifting into defensive names. A lot of people might be saying, okay, all these stocks are down 20, 30%, but why is the S&P down maybe 1 or 2%? Well, because XLP, consumer staples, is keeping up the S&P. XLK, tech, is down 1%. XLP, consumer staples, this is your Walmart, Coca-Cola, etc. That's up 1%. Before today, here's the ugly stat. Before today, the last time XLP was up 1, while XLK was down 1, aka consumer staples were up 1 and tech was down 1, was September 22nd, 2000. So the last time this happened, January, March, April, September, all of those dates in 2000. Obviously, we know what happened after that. We had a dot-com crash. Now, again, those companies had no earnings. Pets.com was not real. Google just put up operating margins of 34% with 48% growth on cloud. We are in a different environment. But when you look at those stats and you kind of try to historically comp why or how it's happening, the psychology, I think, is more important. The fact that people are fleeing tech and going to consumer staples. You know, people know Coca-Cola will be around forever, even if Broadcom won't be. Which, you know, that is the rationalization for some people. That is very similar to what has happened in the past, and that's why I think you're seeing a little bit more pain right here as well. So, I mean, this is incredible. This is pretty incredible. The momentum we're seeing in the downside for software stocks, for the divergence of breadth, and for how the NASDAQ has been reacting. And then this doesn't help either. Stifle downgraded Microsoft to 392 from 540. We're downgrading Microsoft to a hold as we believe the street revenue and EPS expectations are too optimistic. I mean, Microsoft is one of those names that barely has a $400 price target across the street. The fact that this is the first major downgrade down below the $400 range. I mean, if you start seeing more of these downgrades, you're going to have a lot of institutional investors potentially take some losses or sell their stocks. And I think that's part of the rotation that we've been seeing right now. The other big chart that we saw yesterday, take a look at this. Yesterday was the worst day for momentum. This is from Goldman Sachs. This is their chart that tracks the way momentum moves since the March 2020 COVID crash. It was a 6 sigma move on momentum, 11.5% to the downside. Last time I checked yesterday, there wasn't a global pandemic that was announced. There was Google earnings that were amazing. So again, I understand why people are pissed, because they're just like, what's happening and why is it happening? And if the argument is just that we were overvalued, it's like, if we think Meta at 20 times forward earnings is overvalued, then we are in a brand new paradigm for valuing tech stocks, where PEs have to go back to like 7 and 9 for the broader market to be reasonable, which was, what we had back in 2010, but we're in a different world. And the fact that we're seeing this type of indiscriminate sell-off in a different world is quite incredible to see. Here's the last chart I want to show everybody. 16% of S&P 500 stocks are at 52-week highs, while 5% are at 52-week lows. This is another reason why the S&P is not really emblematic of the pain like it was back in April when it fell 30%. Last 3 times this happened were July 1990, August 2015, and March of 2025. Each of these moments, these are the 3 red dots you can see on the screen, were followed by at least a negative 10% S&P 500 correction in the next 2 months. Not saying it's going to happen again, just wanted to present the data to show everybody that the last time we had this type of divergence in the broader market, it was followed by something pretty ugly. And 10% on the S&P, I think, will wipe out a lot of these growth stocks to, significantly, including Hood, including Palantir, including Rock Lab, including SoFi. I mean, their valuations are going to get compressed. This is the other horrible thing. If this nastiness is happening because the S&P is barely down, what happens when the S&P actually falls? And Bitcoin's going to zero. Like, Bitcoin's actually, it's going to be worth like $0.05. Like, I'm just kidding. But still, it's ugly, right? And there's 2 choices in this situation. You either sell everything and go to cash and wait for the carnage to play out and then get back in, or you call BS on this market. And I think there's a little bit of both that is going on right now across the entire board. Let's talk about the margin point, because a lot of you guys are mentioning that in the chat. Yeah, that's a big deal. And I said this yesterday. I think you got to delever. If you're on margin, you got it. And I know this might feel like you're selling the bottom right here, and you don't want to delever at the bottom. But what if it's not the bottom? Because I kind of thought Nvidia at 176 yesterday, or at least 175 would hold. Nvidia went to 171. The idea that Nvidia can't break below 171 is laughable. It obviously could. I mean, AMD, they took it down $40 yesterday. If you were levered up on AMD going into the print, imagine if AMD goes back to 170, you're just gonna be levered even worse. And so it's one of those things where it's like, Palantir put up some of the best earnings in history. That's down 3%. It's down 11% yesterday. Robinhood, which if you look at Robinhood's correlation with Bitcoin, I really do think the reason Robinhood's getting hit is because of Bitcoin. Couch investor who actually sold his PayPal and bought Robinhood 2 days ago. So we were talking about it yesterday. He feels like this is a really good price to get into Robinhood, which, look, I agree. It's undervalued if you look at their long-term growth prospects, but in the short term, it is behaving with Bitcoin. And he put up some charts this morning. I mean, you put the charts on top of each other, it's almost exactly trading like Bitcoin, which means I don't know if Robinhood is going to find a bottom anytime soon unless Bitcoin finds a bottom. So if you're on margin and you have a ton of it means you might have to delever. So I think the forced liquidations on margin from retail and institutional investors, we're at about 1.3 trillion in FINRA margin debt across the market. Yeah, it's bad. It's bad. And obviously that could be creating a little bit more of a downside spiral, especially because the hedge funds are engaging in this, structural rotation from software stocks. I mean, here's a chart on the software stocks, which again, it's just, when you look at them 6 years to the S&P 500, all relative gains have been wiped out. So here's the chart right here. Software relative to the S&P is a particularly brutal chart. Essentially 6 years of relative gains wiped out. That is structural. That's not retail. That's not people waking up and saying, I'm going to sell my Adobe, even if I am levered on Adobe. That is, in my opinion, institutional money managers saying we have to get the hell out of these names. And again, that could be very indiscriminate and not make sense, but that is what's happening. And it also doesn't make sense because it's like, that means AI is probably real, which means they should be buying hyperscalers. They should be buying semiconductors. Like, if software is going to be destroyed, which it sounds stupid saying this, from AI, because people are going to vibe code every important enterprise software platform on the planet, well, we're going to need a lot of compute for that. And the fact that that logical syllogism is not necessarily playing out in the market with a rotation to tech and hyperscalers, it's quite fascinating to see. Sundar yesterday basically said this is BS. Jensen has said this is BS. He was asked explicitly about that. And Sundar said, look, AI is going to be a tool for software companies. We're seeing massive token usage. Many companies are incorporating Gemini into their workflows, and software companies that are utilizing AI have big opportunities ahead. And so, I don't know. You either got to call BS on it or not, but the charts look like more pain is coming just based on historical times where this has happened before. The earnings don't look like more pain has to come. Thankfully, the macro has not been horrible. That's the one thing about the macro. It's not been horrible. But if the macro gets horrible, Waymo, by the way, Boston and Sacramento, Waymo is expanding to Boston and Sacramento. That just came out. If the macro does get horrible, then things get ugly. That's where it's like, you know, the one thing about this as well, it is 2026, and 2026 is, we talked about this in December. It was the one thing that I was annoyed about for 2026 when I was writing up sort of my like predictions in the Substack. It's a midterm year. And for some reason, the midterm years, they don't work out. There's always something in the midterm years that cause a bottoming around the fall. I ran down 7% pre-markets. Nebius down 5%. CoreWeave's probably down. And then you buy the dip in the fall, but you do get a bottom. CoreWeave down 3% around that time. Who knows if this happens again? NVIDIA warns Trump that China chip rules would hurt export plan. NVIDIA warns Trump China chip rules would hurt export plan. Okay, it looks like the White House might be thinking of new chip plans. Again, you had those NVIDIA headlines yesterday about China not taking the H200s, taking the H200s. Every day there's a new headline on that, which is also probably confusing the market about if we're going to get any of this China revenue. Even though the capex that we're seeing here, we're probably going to get a hefty amount of revenue from all the hyperscalers. So yeah, it's ugly. It's ugly. We got a couple other headlines to watch, but I did want to play this video real quick. And you know, I don't know. It's been a couple ugly days. Maybe this will give people a little bit of a laugh. Here's a 1-minute, 13-second video of a comedian talking about the stock market.
I'm a long-term investor in the stock market. That's what you say when you lose money in the short term, right? Everything I've touched has become red, guys. My stock market portfolio is communist, full red and giving money away. It's really bad. One stock I bought got delisted. The stock went out of stock. I tried crypto. I did crypto. Wow. Crypto did me, actually. That's the more accurate. No, I mean, it's not crypto's fault. It's my fault. I didn't understand crypto. Okay, I tried. I couldn't. I'm dumb. I went on Reddit. There's this page called Explain Like I'm 5, right? Which breaks down complex concepts and explains it in a language that a 5-year-old can understand, right? And I read it. And now I'm proud to say that I understand crypto like a 5-year-old. Crypto price go up, sell. Crypto price go down, sad sell. That's why I saw crypto go down, I saw crypto go up, and I bought. Right here, I bought it on the top. That's why I run into people, they're like, oh, I sold crypto at 300% profit. I'm like, bastard, I bought from you. I made nothing. I sold it at high blood pressure.
Saw that last night, and I was like, yeah, that's that's definitely a lot of us that are feeling. So that's not my brother. Goodness. Although I wish I could be that funny, dude. I wish I could be on stage one day and be that funny. So, but no, it's just, you know, it's ugly. It's ugly. And at the end of the day, here's my thing. Please remember, everyone's going through it. Okay. I have taken, I think, like 10 different phone calls yesterday with various different people that are going through it. Trust me, it's everybody. It's not just you. It's not just me. Someone is going to try to be like they were completely hedged. They had puts. Like, most of these people are lying. Okay. Listen, it's if you're in anything that has been affected by high beta growth, you have positions from last year that, you know, you bought in the April lows, all of those, even though you're still probably up on those, are getting decimated, which leads me to think the selling is overdone. And eventually this will, you know, give us a little bit of a short-term bottom and we'll be able to make a move higher. But just don't act like you're alone in this, because you're not. And I think unless you are fully cash, or, you know, you completely avoided most of the names that have been, and again, the other reason a lot of people have been getting hit is because, you know, when you see a Bloom Energy go up 70%, a lot of people bought into that when it was up 60%. Now Bloom Energy is down 30% from those highs. Bloom Energy down 5% in the pre-market. So a lot of people ended up chasing the FOMO, which is inevitable. It's what happens, like a Micron or a SanDisk, et cetera. And they're feeling the pain of it. So it really is everybody. And we're kind of in this together. Time will tell to see if this ends up playing out to the downside. OpenAI just put some stuff out. OpenAI Frontier, a new platform that helps enterprises build, deploy, and manage AI coworkers. Wow, is this Claude Cowork, but for OpenAI? Dude, OpenAI. Oh, we got to talk about Anthropic now. I forgot about that. OpenAI Frontier gives agents the same skills people need to succeed at work. Buddy, you're late. Claude already came out with this shit 2 weeks ago and got all the attention. Claude is decimating OpenAI. I mean, when it comes to the people that are winning in AI from a marketing perspective, it's Claude. They put out a bunch of different ads, and here are some of those ads. If you haven't seen it, it's pretty incredible. They are taking massive shots at OpenAI and the advertising that OpenAI is engaging in as well.
How do I communicate better with my mom?
Great question. Improved communication with your mom can bring you closer. Here are some techniques you can try. Start by listening. Really hear what she's trying to say underneath her words. Build conversation from points of agreement. Find a connection through shared activity, perhaps a nature walk. Or if the relationship can't be fixed, find emotional connection with other older women on Golden Encounters, the mature dating site that connects sensitive cubs with roaring cougars.
What?
Would you like me to create your profile?
Essentially, their argument is OpenAI is going to be super intrusive with ads, and it's going to be a horrible experience, whereas Claude is going to keep everything more pure.
Hey, can I get a six-pack quickly?
Perfect. That is a clear and achievable goal. Would you like me to tailor a personalized workout plan?
Yes.
Perfect. Let me personalize this for you. Let's start with your age, weight, and height. Whenever you're ready.
5'7", 23 years old, 140 pounds.
Got it. I'll create a plan that focuses on aesthetic strength training. But confidence isn't just built in the gym. Try Step Boost Max, the insoles that add 1 vertical inch of height and help short kings stand tall.
What?
Use code HeightMaxing10 for big discounts.
I mean, dude, it's pretty smart. It's pretty. Anthropic is going for OpenAI's neck. They're already winning in the enterprise. They're already shipping faster than them with tools that actually matter. And now they're like, guys, this new AI world that we're so excited about, OpenAI is just going to harvest all your attention, make super creepy ads, put them in the middle of your queries, and you're just going to have a horrible AI experience. Now, in OpenAI's defense, in Google's defense, obviously ads are how the world ends up accessing all these products for free. And Sam Altman had to put out a Bill Ackman essay to talk about how upset he was at these Anthropic ads. I think this just made him look worse. He's like, hey, we had 500,000 app downloads since Monday, yada, yada. It's just like, bro, you just look like, honestly, I think it'd be better to not respond versus complain about how bad the ads were or how funny the ads were, but how upset you are at the messaging. So like, yes, there is a world in which obviously advertising needs to happen to make AI accessible, but it's about perception versus reality. And Anthropic is basically just like, dude, your ads are going to be crappy. They're going to be creepy. They're going to be intruding in people's conversation. If anyone thinks OpenAI is not actually going to be reading your conversational data to target you with ads, I have a bridge to sell you. I mean, like, absolutely, that's what they're going to be. That's how the ads are going to be effective. That's how they're going to get to charge $60 CPMs and get advertisers the results that they want. And I don't know how it's going to play out. And again, it's not to be bearish OpenAI, but the reason I'm bringing this up is because I feel like OpenAI and the $300 billion they said they would give to Oracle, or the $320 billion they said they would give to Microsoft, or the $100 billion they said NVIDIA would give them, like, none of it's happening. None of it's real. Like, wasn't there a headline 2 months ago that OpenAI was going to pay a ton for Google TPUs? Where is that headline? Where is that, like, a confirmation? When have Sundar and Sam Altman actually said together, yup, we're engaging in a project? Like, all of this stuff is so fugazi. Broadcom literally said in December, the reason Broadcom went from 420 to 330 on the earnings, they said expect zero revenue from OpenAI in 2026. Hocktan was like, maybe 2027 we'll see some revenue. This is after they put out a 30-minute podcast with the OpenAI president, Greg Brockman, talking about how excited they are to build 10 gigawatts of data centers. And none of it's happening in 2026. Again, I want OpenAI to win, because if OpenAI doesn't win, I think we're going to have a lot of issues. But we got to call a spade a spade. It is looking very ugly for OpenAI from a perceptual perspective. And I think that's what's leading to the market feeling a little bit afraid about what's happening with OpenAI. But Anthropic is definitely taking advantage of this. S&P 500, this was also down. This was also pretty crazy yesterday. Saw over $60 billion of volume yesterday. That doesn't happen that often. It's called the freakout zone when you look at 60 billion. It's done it already 7 times this year. Gains in stocks is more hard-won than in the years past, based on the level of volume that's coming into the S&P. That's also probably part of the reason why the S&P has been a little bit of a safe haven, because people can get exposure to JP Morgan, which is not down as much as SoFi. And, given SoFi is not in the S&P 500 yet, that's where people try to hide out. Then you had Trump yesterday. He had a bunch of interviews. Let's look at some of those clips. Here's what he said about AI.
AI is a big deal. AI is going to be maybe the biggest thing, bigger than the internet, bigger than anything else. We are leading China by a lot. We are leading everybody by a lot. They're all building their factories here. And you know what I did for the electric? Because they need twice the electric as we currently produce for the whole country, which is crazy. Nobody can do that. But so what I did is I came up with a concept. Each building that is built is going to generate their own electricity. They're going to build their own electric plant. We are building numbers of AI. And by the way, also auto plants, everything. Right. We're building everything. AI is a big deal. AI is...
And then this is what he said about China, which he said they had a good call yesterday that we talked about that in the market open.
I just got off the phone with President Xi, and he is amazed at how well the United States is doing. He said he's never seen anything like it.
You brought the conversation, Mr. President, so let me ask you, what did you talk about with the leader of China?
About a lot of topics. We talked
What's
about
the most important topic? Is it chips? Is it the wars in Ukraine? What is going on?
I would say the economy, the relationship that we have with China. I'm going to be going there in April. Then he's coming here toward the end of the year.
Coming to the White House?
He's coming to the White House, toward the end of the year. We have a very good relationship. And, it's important that I have a good relationship, and for him that he has a good relationship with me. We have to have these are the two most powerful countries in the world, and we have a very good relationship.
You talk about tariffs?
We spoke for an hour.
Does he ask you about the tariffs? Is he saying this is hurting us?
Well, they're paying a lot of tariffs, as you know. China's paying a lot of tariffs. In the past, they didn't. I'm the one that put tariffs on China. I put tariffs on a lot of tariffs, or just so you understand, making our country rich. Our country has taken in hundreds of billions of dollars in tariffs, really trillions, because the threat of tariffs is getting all of these countries to lose to us.
Here's my question to everybody. And, hopefully this China stuff is productive, because better trade deals with them would be good for the broader market. Do people believe that there is still a Trump put on the market? That is my question. Do people believe there's still a Trump put? A Trump put is defined as Trump will not let the market get as bad as it could get, because he's going to try to, juice things up, tell people to buy the dip, whatever he needs to do. Amazon down 3%. They've got earnings today. If they took Google down 5% on these earnings, I don't know what they're going to do to Amazon. And Nurses, by the way, that's down 10.8%. That one got hit pretty bad as well. Lack of revenue growth here. But do we think there's a Trump put? Yes or no? And, you go back to 2018, last time before 2022, where we had the midterm year, there wasn't really a Trump put. Things got bad. So I wonder if there is going to be the same type of Trump put again, and how ugly it could be. But I just don't know. I'm seeing a lot of yeses and nos in the chat right here. It's a week one. Yeah, let's do a poll. Let's do a poll for this. We've got 3 minutes till the market open. What did you guys say on the green or red poll? Green or red? Let's see. I think the majority of people said red. Google's the one I want to look out for today when the market opens. They took Microsoft down 10%. I wonder if they're going to take Google down with it. Feels like it would be a bit unjustified. 70% of you say red, but that's the one that I want to look at. Do you think there is a Trump put? Also, are people buying anything? I mean, put in the chat. I didn't buy anything yesterday. Buying anything, selling any calls, selling any puts? What are we seeing? You already witnessed his lack of control with crypto. Well, look, that's a good point. I mean, the crypto bros got completely rug pulled. The crypto bros told me Trump would be the best for crypto. There's no strategic Bitcoin reserve. And he picked Kevin Warsh, who, let's just talk about him real quick. Been doing more research on the guy. He doesn't like QE. At a basic level, QE is good for stocks. It pumps more liquidity into the system. It's really good for Bitcoin. It's really good for gold and silver. QT is when you when you tighten, you sell off bonds on the balance sheet, the Fed's balance sheet, and there's not as much liquidity. There's not as much money to go around. And that's not good for any risk on asset, much less Bitcoin or things that are speculative. So Warsh, although he thinks AI is going to be super deflationary, which is bullish, he thinks that rates should come down because of that deflation, which is bullish. He's a hawk on QE. And even if he turns out to be a dove, the perception of him being a hawk is what has caused Bitcoin to go down 20% since Friday's announcement of the nomination. Why did Trump pick this guy? I still don't know. But for all my crypto people, like, he screwed you here. Like, Warsh is not, Warsh, like Rick Reader would have taken Bitcoin back to at least 90 because he's a dove. He wants, and you would think Trump wants a dove. You would think, given how much he complains about rates coming down. And he ended up picking a hawk who might end up helping with rates, but not help people who own assets. So it is very confusing for why he picked who he picked. And I just don't fully know how the market's going to react to it. 56% of you think there is a Trump put. About 40% say no. So 60-40 on if there is a Trump put or not. All right, folks, let's get into it. All eyes on Google. Thank you, everybody, for being here. Let's see if this continues to get worse as we get into this market open. Thursday, February 5th, 9:30 a.m. The stock market is now open. All right, wake your ass up. Google down 7. Google down 7, 312.38 on the Googs. She's taking a beating right here as we get into it. 310 right there, 6.7%. Robinhood down 3.4. Iran down 2.6. CoreWeave down 3.7. Bloom Energy down 3.7. IGV, that's down 1. SanDisk, that's down 3. NVIDIA trying to go green. You get a little bit of green on NVIDIA. AMD just went green. Broadcom barely going green. That's also going red. It was at 330 yesterday because of Google's earnings. That one now is basically up 1%. ELF actually had a great earnings that was up 16%. Then it went down 5%. Now it's up 10%. So you got ELF right there up 11% on the day. Intuit, that's up 1%. Meta 658, that's down 1%. Ondas, that's down 4. Salesforce, that's down 2. Starbucks, that's green. VG was green yesterday. That's actually down 2.5%. Grab is down another 1%. Unity's down 1%. SMH is down 0.5%. Silver, 14% down on SLV. Spot price of silver is 75. That's down 11% on the day. Gold is down 2%, 4,800. Gold was at 5,500 on Friday. It was at 5,100 yesterday. Gold and silver continue to get hit. Copper, that's down 3.5% on COPEX. Amazon, are we dumping into earnings? We are dumping into earnings. This thing was 234 yesterday. It's at 4.3. Google, they're taking her down. They are taking her down. The fact that they are taking Google down 7.5% on those numbers. Google is no longer a $4 trillion company. Microsoft's about to go below 400. My goodness, 402. Microsoft loses being a $3 trillion company, 2.99. Microsoft is no longer a $3 trillion company. S&P 500, wow. There's your immediate hit on market open. I'm surprised certain stocks are not down even more, to be honest. S&P down 1%. We just lost 680 on the S&P. I am surprised we are not down much. It's like you lose 1% into that. You would imagine some of these names get hit even worse. The fact that Hood's only down 2 and you got some green candles from the pre-market is actually nice to see. Symbotic right there, that's flat as well. Hims again had that Vigovi copycat that was up 15. Now it's up 8. So you had a little bit of a sell-off from the highs right there. BMNR below 20. That's down 4%. MicroStrategy, I wonder what the heck's going to happen to Sailor. That's down 6%. Bitcoin's got to normalize around this price. I think their average is at 74. It's at 70. There's what's his name? Tom Lee is sitting on a $7 billion loss. And I believe, what's his name? Sailor is sitting on a $4 billion loss. So both of these guys are sitting on some pretty heavy losses at the moment. AMD, wow, below 200. The fact that NVIDIA is kind of green and AMD is down is weird. But AMD is getting a hit. Bitcoin's back. Yeah, exactly. Election day levels. Almost exactly back to those levels. Johnson & Johnson, that's up. Verizon, that is up. Adobe, actually, one of the software names, that's up. SoFi, it's defending 20, but it's 18 cents away. Zeta's down below 17. TTD is actually up a little bit. AppLovin, 380. This stock was at 750 not too long ago. Enphase down 4% after a pretty good earnings. EOSE, that's down 6%. Tesla loses 400. Tesla loses 400 for the first time this year. Yeah, for the first time this year, 392. Google, not down 10%, down 7. It's trying to bounce off that 306 low. Maybe that's potentially a spot you can rest at. Meta's, I think, at 650, right? Meta is 662. Meta's still down 1%. Nabesis, that's below 80. Yeah, that just got hit pretty hard. So did Iran. Netflix is actually up. Netflix being the safe haven today to an extent. So is Elf. I guess people will buy makeup to hide their tears from the stock market. Novo CEO says people taking the Hims compounded pill will be wasting $49 because the compound will not be absorbed. I think he's trying to save his stock right now. But Novo, that's down 5% as well, as that is getting it. SMCI, how about that one? SMCI down 4. They actually had a good earnings, but that's down 4. You're seeing that get some pain. B Menards, that's down 3. S&P trying to defend 680. It's hard to say if we're stabilizing or not. Yesterday we had, I think I counted them, 4 fake bounces throughout the day. And it was pretty annoying because as soon as you got in or you took a trade or anything, immediately we just went red. So, I wonder if that's going to be the same thing here. But you're obviously seeing some pain as this one's trying to normalize. Micron right there, 371. That's down 2%. NVIDIA at least goes green. It's good for NVIDIA to at least get some green right here. But you're still getting hit. Fubo's pumping. I don't know why Fubo's up today, but that's up 10%, 14%. I guess Fubo's a little bit of safety as well here. On the day. Him still up 8. BMNR down 3. PayPal, that's almost below 40. Apple 274. That was actually saved yesterday. Applied Digital, that's down 3%. Galaxy, this one's been getting hit. That's down 3%. Reddit, wow, 150. Reddit 150. SoFi, are we below? We are below 20 on SoFi. We are below 20 on SoFi. A lot of these growth names are now getting hit. Counterpoint Research says memory prices will soar up to 90% in Q1 of 26. They might be right about that, but these memory stocks today are still getting hit. SanDisk went from 725 to 575. That momentum completely reversed. And they could go right back up there, but it's hard when momentum is pretty ugly. Same thing with Micron, is that one's getting hit. How about Nike? Nike was good yesterday. Nike is only down 1% today. Silver is still crashing. Silver down 12%, folks. SLV down 15%. I mean, it's not good. It is not good, the type of pain we're seeing right here. SLV, there you go, 67.20 as that is down. Trying to see what other headlines we have. I don't think we have a ton of macro data today. Novo, that's at 45.12. Again, the job data we got this morning was not the best. For those that are wondering, we had the worst layoffs in January since 2009. And that's why I think the market also immediately went red as soon as the market opened, in the pre-market as well. And we had the least hiring in history at 5,300 jobs in January. The VIX, I think, is up a decent chunk today. VIX right now, yeah, it's up 14%. If I'm not wrong, I think VIX is up 14%. VIX is at 2142 right here, which should signal a little bit of capitulation. Unless, is the VIX going up 40% today? Is that what we're doing, or are we going to get a little bit of reprieve? But you are seeing the market try to find a little bit of a bottom right here. Palantir 136.89. That's fighting to go back to 137. Google, did we reverse? There's your green candle, still down 4, bounce from 306 to 318. If the VIX has topped out for the day, usually that double-digit percentage move on the VIX tends to be enough panic. But again, we had a lot of fake capitulations yesterday. Meta as well, potentially trying to go green. 8 minutes into the market open. Broadcom pushing 4%. That's green. AMD goes green. That's nice. At least we're at 202. Bitcoin 70.5. That's a big move. That should be great for Hood. Hood is at almost 79. You can see those green candles coming in right there as well. Let's see if this shifts. SMH, that just went green. Iren probably reversing right here. There you go. Iren, that's also slightly green. Intel also goes green. See, this is, again, this is the hard part about this market. We're going to need to see if these names actually get above certain levels and stay green, or if it's just little fake teas of buyers coming in, but eventually those buyers leaving and not really ending up holding to these names. Pound right there, 136.34. It's got to get above 137.98 is what we're looking for. SanDisk has so much momentum. I agree. SanDisk, look at that, back up to 600. This momentum, I don't think it's dying out anytime soon. I think this is going to be a proxy play for the market. If the market's bullish, SanDisk is probably going to $1,000 a share. If not, it's going to be stuck in this range. But the overall earnings around memory is just very, very strong. The question is, the people who bought at 700, like, are we getting back to 700 anytime soon, or is it better to take your losses and get a better entry and try to make back that money in a different way? Palantir just lost 136. See, again, these red candles. SoFi just got back above 20, now right below 20 in 1989. It's just hard for them to stick. BMNR below 20, HIMS still up 7.4%. EL getting pounded. Estee Lauder why is Estee Lauder down 17%? Did they have earnings today? Oh, they did. Hold on, let me see. I actually didn't look at a bunch of earnings today. We had Hershey's as well. Estee Lauder, I don't have these numbers. Net sales, $4.2 billion. They missed on revenue. They beat on EPS. Guidance is I don't know if that's that's not a 17% drawdown justified quarter. Slight miss on guidance, slight miss on EPS. Everything else was pretty good. Alpha is up 6% in comparison, and then Ulta is down 0.31. 18% on Estee Lauder. It feels a little weird. Impacted by tariffs. Yeah, but why wasn't Elf also impacted by tariff? I mean, that's a bit confusing. Robinhood trying to reverse, touch 79, came right back down. Palantir touch 136.50, came right back down. Apple still down. Google shares fall 7%, the most intraday drop since May 7th for the Googs, as that one's getting hit. Micron just went green. Nike just went red. Silver still down 13%. I mean, it's looking like we want a bottom right here. The way some of these names are getting these green candles, but then going red. But again, Google almost recovering, still down 3, but it was down 7. But then again, we said that yesterday like 5 different times, and each of those times it ended up not at all being anywhere close to a bottom. It is incredibly volatile right here. Rocket Lab, though, holding on from yesterday. It was at 69 yesterday. Now it's at 71. Tesla's at 397. How about Quantum? D-Wave is down another 4% on the day. Rigetti, that's down 5%. So your quantum names are getting hit. Bloom Energy, that is almost positive on the day. So that one kind of trying to recover. T1 Energy, that is also almost positive on the day. That was at 9. Now it's at 7. Baidu, the China names, are they healthy? China actually doing okay. Baba is also up with Baidu. So China's green, drones are red, Uber's green, Coca-Cola's green, Netflix maybe a little safe haven. I don't know why Amazon's getting hit, dude. Why? Like, the cloud numbers on Google were either the market's like, oh, cloud was so good that Amazon's losing market share, or the street is like, Amazon's going to spend way more capex than we think, like Google, and we're just anticipating it, so we're going to sell it off before it happens. Where's GameStop? GameStop's up 1%. Burry tweeted today that if we get a 2008, 2009 scenario, GameStop will be one of the best options to go long on. So I guess that is his plan to weather the storm if things get as ugly as they could get. Let me pull up a couple things right here as well. We also had Google price target upgrades. All of them got upgraded to, yeah, I mean, there's 4 people that have 395. Everyone else is 400 to 420 across the board. 400 to 420 across the board. So you now have about 70% of the price targets on Google at 400 on the day. GameStop still green. Amazon still down 3. Google still down 3.4 or 2.4. What about space? ASTS. Are we seeing this below 100? As much as I love this company, they don't have revenue and they trade at 1,967 times sales. It's not to be bearish, but I think at some point in the market, it just has enough with some of these names. But maybe not. Maybe this is where they bought. Maybe 20% down is enough pain. Fluence Energy, wow, 18% down. You know, I just want to say that there were some people on X I saw over the past couple of weeks that were just gloating so hard about being in these high beta names. And Fluence was one of those names, and they screenshotted their portfolio and they're like, my stocks only go up, yours go down. And I don't know, dude. Like, Fluence is not just going up. It was down 10% yesterday, down 18% today. That person's down 30% on those shares. And so it's one of the, and the reason I'm bringing this up is because when you see these many retail investors gloat the way they're gloating about how everyone who's not in high beta is not making money, it's like, that tends to be a pretty accurate signal that shit's about to hit the fan. Because you don't end up having one sector of the stock market just go up indefinitely without there being some pain, especially when that sector of the stock market has stocks that don't make any profits, much less revenue. Things can get pretty ugly. IBIT, that is down 4% on the day as Bitcoin has still taken a hit. Bitcoin 70.2. And now you're seeing some more pain. Yes, Hood and Palantir are down as well. No, I agree, but I'm not out here screenshotting to everyone. Look at Hood and Palantir; they're all up, and everything else is down. You know, like that. When your stocks are up, you take it with grace, because the downside is also very painful, and it's more of a broader life thing about when you don't take your wins with grace, and when you brag about them, and when you're. I mean, again, some of the tweets these are smaller accounts that are trying to build an audience, and the way they are talking to their followers are, "You all are idiots. I'm the smartest person in the world. Look at all my stocks; they're going up." First of all, I've never done that. Second of all, that's just not the right way to do content, in my opinion. That's like you just end up becoming a douchebag. And then you end up having to respond to all those followers with your stocks being down 30% in a day, So I'm saying, yeah, everyone's feeling it, but if you were cocky because you were in high beta and you thought you were better than everyone else, you're feeling it now even more. And it's a lesson on handling this stuff with grace. CoreWeave right here, that's down 2%. Ethereum, $85 away from going below 2,000. Where is Oklo? Oklo, 67.05. That's down 1.75%. As that one's getting hit. Oracle, Oklo was at 99 last week, by the way. Oracle, 144. That's down 2. They're diluting by 20 billion as well. How is VG held up so well? Well, natural gas is still going to be relevant, even if AI dies out. Oil prices are down today, and I think that's also helping it right here. That's down about 3%. Natural gas obviously has been up about 30% over the past week. VG also, you got to remember, VG was down 70% from the highs. So VG is one of those names that does it really have to go back to $6? Like at $9, it's still down pretty aggressively from last year's highs. So some of these names may have actually bottomed, and they're not as critically dependent on like Nvidia's earnings. I mean, Exxon, Chevron, all of those have held up as well. Exxon, though, that's down 1.5% on the day. Walmart, Derek says, because I knew. Shout out to Mr. Derek right here. He did build up a pretty big position in VG. But yeah, I mean, VG it's not some high beta growth name like Fluence Energy, Walmart green on the day at 128 as well. And that's why it might be surviving some of this downside right here. D-Wave down 3, Estee Lauder down 18, Meta goes red, BMNR still down 2. S&P though, there's your green candle, 682, bounced from 678. I mean, that should be some potential short-term stabilization. But we have to see if some of these other stocks can cooperate. Celestica, that one got hit last week for, I think, no reason. It beat EPS by 88%. I don't know why that one got hit. That's up 10% on the day, so it's nice to see that one getting some momentum. Sachin says VG was early in getting screwed, and it does it with generosity and in good amounts, so it's able to be flat now. No, that's fair, right? Like, if you got into names that already got hit so badly by the end of December, they kind of have nowhere to go but up, as long as they're not an absolute shit show of a company. Also, the arbitration case was resolved, which took a big burden off of VG as well. Intel's up 3% on the day. 50.29, as that is also green. Robinhood 79, a little bit of momentum right there. Silver trying to recover. Palantir, if we can get above 137, that would be nice. Silver still down. SoFi got a bounce from 1980 to 20. I really don't think SoFi should be below 20. I mean, that to me is, I could see Hood getting back down to 70. I could see Palantir getting back to 120. But SoFi, I mean, maybe it goes back down to 17, 18, but that would just be incredible if there are multiple compresses. Just because that one's gotten hit so badly, right? And it's not supposed to be as volatile as a lot of these other names. So, I mean, that one is pretty wild to see right here. Amazon, 225. That one's down 3. Snapchat is the worst company in the history of the stock market. That's down 6%. If I told you guys the stats on their free cash flow versus buybacks versus stock-based compensation, I mean, it's sad. It's sad to say the least. They did produce a profit, but if you take out their stock-based comp, they're not free cash flow positive at all. I do think the DAU, MAU growth, ARPU growth, 24 million Snap Plus paying subscribers, that should be enough to at least get some institutional investors excited and be like, swinging this thing back up to at least $7 from $5.54 is not crazy. But Evan Spiegel has used shareholders as his personal piggy bank, and it is disgusting. Like, you see the wealthy and elite of our society, and then how they use the public, essentially, public shareholders, Snapchat, which again, if you bond to Snapchat, it's you have to be accountable for that. But still, the way they have used shareholders to compensate executives, it's just horrible. I mean, company's been public for almost 10 years and they can't make money. At some point, you got to say, all right, we deserve to be acquired. But his ego and his voting class shares will never allow the company to be sold unless he wants to. Elf, by the way, losing a lot of its pump. That's up 4% now from up 10%. SanDisk back up 5 at 615. Twitter did the same, 100%. Twitter did the same. And I think that's, why they were forced to sell to Elon as well. Now, granted, I think a swing back to 7 on Snap is not crazy, but I would not want to take the risk with this thing just saying here. Are we excited for J. Cole's album tomorrow? I am very excited for J. Cole's album tomorrow. And I hope it's not a disappointment because the market's been an absolute disappointment. So I would hope J. Cole's album is less disappointing tomorrow. Oklahom's down 3, Oracle's down 2, Figma down another 0.5%. What do you think about Grab earnings next week? I think Grab's got to put up some really good growth guidance. If they don't, I think the stock is getting hit. If they do, I think we are going higher. The problem is by next week, does everything change, right? Like there is so much downside momentum that even if Robinhood Grab put up good earnings, you know, if the S&P falls again, is that going to matter? But they definitely have to put up good earnings to at least give them a chance to hold on. Palantir, she's losing it. 133.98. There she is. 133.98. That one is getting hit now on the day. Ugly. Ugly, ugly, ugly. Is Chris on today? I would love to hear his perspective on his PayPal purchase. So Chris did buy PayPal. He likes it for a swing in a couple years back to 90. Today's Macro Thursday, yeah. So I think he'll talk about it today on the market close. Oh no, I don't know if we could do the market close. We have freaking Amazon. I'll see if I can get him on tomorrow morning, Friday, and we'll see what he says. But yeah, he likes PayPal. He likes PayPal back to 90. I haven't read his full thesis on it, but he thinks this one is oversold, and this should have a recovery. I mean, look, is PayPal really going to $20? I don't know if it's going to 90, but I don't know if it's going that much lower than it is right here. SMH, that goes 1% on the day. Hood's RSI is 17. Yes, Hood's RSI is incredibly oversold. It's the most oversold in 3 years. Same thing with Palantir. Do we have Amcor earnings today? I don't think we do. No. If anyone knows the day for Amcor, I don't think it's today. I think it's in 2 weeks. Today is MicroStrategy, Reddit, Roblox, Fortinet, Bloom Energy, Affirm, CleanSpark, Iren, Amazon. I'll be listening to the Amazon call, not Iren's call, but we'll talk about Iren. And then we'll see what numbers they put out. February 9th. Okay, cool. So that's Monday. Do we get jolts today? Are they actually releasing the jolts? By the way, the ECB maintained their rates. The ECB maintained their rates. Oh, wow, we do get jolts today. Okay, in about 6 minutes, we get jolts. Okay, the jobs data so far was not good. Hopefully the jolts is a little better. Yeah, it is on the calendar, so maybe we get it. All right, I guess we're going to have to see. Roblox has been decimated as well. Roblox has got hit pretty bad. PayPal still down. Okay, so Jolts, the street's expecting 7.4 million, if I'm not wrong. Yeah, 7.14 million. We need more job openings than that. If we get a number that's like 6.8 million or something, and there's 300,000 jobs that disappeared, I think we could see some blood. But that means immediately Jay Powell will have to think more deeply about cutting rates, which is important. Broadcom, what are we looking at? Broadcom, 320, the Googs, 321. Is anyone buying the Google dip? Put in the chat. Is anyone buying the Google dip? I don't really know if this is a dip, but curious if people are buying it. Hershey's is up 7%. I mean, at this rate, I don't know if we can afford chocolate, but at least Hershey's, I guess, had a decent earnings today. Hershey's beat by, wow, 22% on EPS, 171 versus 140. Revenue, they beat by 3%. See, again, like these are incredible earnings. And all of it flows back to the consumer and supply chains and maybe AI and productivity if they're beating EPS by 20%. Like, that's not easy for a company, for Hershey's to do. They're not a tech company, which begs the question, why should the market completely get sold off because of that? Now, again, there could be another argument. Look, the S&P 500 is trading at, I think, 26 times earnings. That is the highest in history. And historically, the average is around 18 to 21. So, there are some arguments out there that it's just like the S&P is going to correct because it's not able to sustain such a high valuation multiple. Now, the bulls will say, well, the growth rates of the earnings that these companies are putting up is enough to justify it. Maybe not. The other theory I've heard, we got Jolts in 3 minutes. The other theory I've heard, which I don't know if I fully believe in, but the other theory I've heard about why the market is falling right now is because these Epstein files are so bad and so many people are implicated in it that the powers that be are tanking the markets so that everyone can not focus on how bad the Epstein stuff is, because it's really hard to focus when you're losing thousands and thousands of dollars every second on something else. And eventually when that blows over and the public loses interest, the markets will come back up. I mean, that's I don't know if it's a stretch or not, putting the theory out there. I don't know if I necessarily believe in that, but it makes you wonder. And the only reason it makes you wonder is because there's not a pinpointed reason for why the market is necessarily falling. This is not, Liberation Day 2.0. There's just a bunch of random things that are out there. So you got some people saying, dude, maybe it's just people selling shit off, the hedge funds deleveraging because they were told to cause some panic until this Epstein shit blows over. Again, tinfoil hat. It's a conspiracy theory. But do we really want to believe that Anthropic's legal tool is why Salesforce has to lose $40 billion in market cap in 5 days? Like that the Epstein thing seems a little bit more believable than that shit. But like maybe it really is just software is going to get destroyed by AI. Also, again, like Anthropic's cool, but like the market's acting like they built a Salesforce competitor overnight. And again, if that's the case, why are they not bidding the crap out of NVIDIA? Because if you are replacing Salesforce, which is $40 billion in revenue, imagine Anthropic took the entire TAM of Salesforce and their entire revenue, they would need to buy a lot of compute to make that happen, which you would imagine Nebius, Iren, all those names would be a beneficiary. Oracle, like those names, like all those names are getting decimated, which is why the software narrative doesn't make sense. Microsoft is $1 away from going below 400. $1 away from going below 400 right here. Tether just invested $100 million into a US regulated crypto bank. I wonder when gold's going to get sold off, because we know Tether started buying a lot of digital gold, and I know gold's been sold off, but I don't think this is the real sell-off. 5,500 to 4,800, I don't think is the actual sell-off on gold. That was the speculators that got hit pretty bad. I feel like the real sell-off is back to 4,200. And I wonder if that happens when people start delevering out of that. All right, Jolts, let's see what we got. We should be getting it right now. Jolts, 7.14 million is what wow. 6.5 million. Okay, the expectation said 7.14. It just changed to 6.92. 400,000 jobs were lost in the past month. Some of you got some of these headlines are saying 7.2 million expected. Trading Economics is saying 6.92. Let's call it 7 million were expected. We came in at 6.5. That what is Trump going to say about that? How do you defend that? How do you defend that 500,000 jobs disappeared? Were those all fake jobs? 500,000 fake jobs? Or is that the market saying, no, we've got an issue and people aren't hiring anymore? Where's the S&P? S&P just went red on that. We just lost 680 right on that news. Right on that news, we lost 680. Palantir's down another 5%. Amazon 222. Amazon contributed to those jolts being down. Snapchat's getting hit worse. Everything's going red right there. Microsoft below 400. When's the last time we saw below 400 on Microsoft? It was April of 2025. That is a pretty ugly Jolts miss, folks. A pretty ugly Jolts miss. And I think it was kind of expected, right? Given some of the labor market data we've been seeing. Yeah, there shouldn't be that many jobs open if people are getting laid off to this extent. Oh man, let's get some coverage and keep going from there. But that's pretty ugly. 500,000 jobs lost. Bitcoin, do we just lose 69? Oh my. Bitcoin, $100 away from losing 69, 69.1 on BTC right now.
26. So that's not a great sign to start the year. Claims also kind of backed it up. We get the initial jobless claims every Thursday. And well, that's been a very sort of benign number showing not high layoffs. We did see a tick up. Highest level now since December 2025. So we got the highest number of claims of the year, higher than consensus, 231,000 versus the 209,000 prior. Expectations were around 212. So it's not alarming levels of layoffs yet, but we watch the trend, right? And when it goes up, it signals that more Americans are filing for unemployment claims. Carl, how many times have we talked about all the companies that have announced layoffs, from Amazon to UPS? And UPS had maybe a bigger skew in some of these reports, but and I'm not sure that this even necessarily impacts the January jobs number that we will get next week, but there's something going on to start the year, and now it's consistent and confirmed in a number of reports. ADP, claims, Challenger, the Revelio numbers also out this morning, which also showed weakness.
That's a decline of 13.3K. That'd be the biggest drop in 5 years on Revelio. Yep. We'll see what Wednesday brings. Interestingly, within Challenger, the reasons that are being given for the layoffs, only a small slice of it is AI. It's mostly about...
It's about 7% that was AI. The rest was structural. I mean, but if it's also demand-based, wow, Bitcoin, 6880. That's not good for the broader economy. Palantir, another 5 down. Nebius down 7. Microsoft, 399. Did you buy Shopify? No, I have not bought Shopify. Shopify looks like it's heading lower. CoreWeave down 5. NVIDIA goes red. AMD 196. There you go. 200 has been broken on AMD. we need emergency rate cuts. Oh my gosh, dude. This is so bad. App 11 down 3, 376. Yeah, that JOLTS report was not what we needed, folks. SMCI, 10% down. This is incredible. Where's Duolingo? Is that going to $5 or something? Duolingo's green. All right, there you go. We're going to need to learn how to speak multiple languages to be more employable when the market takes us all out. Will JOLTS increase the rate cut likelihood? Yes, they should. Problem is it might be a little too late. We're at 15.8% on the March probabilities. I mean, imagine they don't cut in March, even with all this jobs data. It's a real possibility. Robinhood 75.58, lows of the day. That's down 6.2. S&P is now down 1%. Bitcoin lowest since November 2024. Bitcoin lowest since November of 2024. That was right before the election. So we round-tripped the entire election. We round-tripped the entire election here. Gold still down 2, silver down 12. NVIDIA 172. Dude, NVIDIA, we were talking about that 176 level yesterday. If it lost that, it was going to be dicey. And it got back to there overnight, but not able to hold on. Again, I think the most important thing to understand about all of this, and we talked about it a lot in the morning, is are the earnings that these companies putting up justifying their valuations? I think the answer to an extent is yes, but also to an extent is no. As much as I love Rocket Lab, and I don't care how many people say I'm a Rocket Lab hater because I bought this stock at $17 back in April. I don't know if them putting up $500 million in revenue is enough to justify a $40 billion market cap. You could say the same with Palantir. You could say the same with Hood. But so cross apply what I'm saying on Rocket Lab for Aldo. You could say the same with Bloom Energy. You could say that. My point is there's a lot of names you could say they're getting an aggressive multiple, even though their growth rates are high. You cannot say that about NVIDIA. You cannot say that about Meta. You cannot say that about Google. You cannot say that about Amazon or Microsoft, unless we think 25 to 30 PE multiples are just not normal anymore, because those are considered normal for the growth rates these companies are putting up. But the problem is, I think there's so much leverage in the Palantir, Palantir, Rocket Lab, Hood, SoFis of the world, where those growth rates are so good, but their multiples have been given such a premium for so long that now that the growth rates aren't getting treated with the same premium, even though the growth rates are even getting better, like with Palantir at 70%, that's where you get multiple compression. And so I think the argument around earnings growth justifies the market being good. Yes, for the biggest companies in the world, maybe not for your Bloom Energies, which again, amazing company, nothing against it. But it's also a little expensive. And I think even Chris Camillo, who got a lot of people into this name, will tell you that it's a momentum trade. It's all been momentum. There's some good fundamentals around it, but it's also been a lot of momentum that's taken it up. And momentum, as we're experiencing right now, obviously goes to the downside as well. Corey right there, that's down 5.4% on the day. ETH's about to lose 2,000, isn't it? ETH is $11 away from losing 2,000. The VIX is still spiking, right? VIX, we're still up about 12% on the day on the VIX. Camilo got into BE well below 100. Exactly, right? And I think a lot of people with margin got into Bloom Energy at like 127, 130, 135, if not 150, right? Like, and that's where you're seeing the pain. So I think if you have to sum up the reasons for why the market's down, you got Kevin Warsh, that's hawkish, bad for speculation assets, aka crypto, because of QT. You have this OpenAI headwind that whether you love OpenAI or not, they are confusing the market, especially when they say, they're 50% of Microsoft's RPO, 100% of Oracle's RPO. That's just not something the market is liking to see. Then number 3, you have the SaaS carnage because of Anthropic. For whatever reason, the market thinks ServiceNow and Salesforce are just going to go to zero. And then I guess you have now, today, to sum it up, outside of the geopolitical stuff with Iran, which hasn't really heightened like crazily enough for that to be, I think, a legit reason. Today, you've got labor market data that's pretty damn ugly. It's just not good. And you put all 5 of those things together, I guess that's how you get this market. Do you think crypto's by the dip, BM&R, MicroStrategy? I think all of this stuff looks like a falling knife right now. Like, I don't know. I'm not going to be the guy to call the bottom at 2017 on Ethereum. Because why? What would be the reason for this to bottom? Like, what would be the reason for Palantir to bottom right here? What would be the reason for any of these names to bottom? I really don't know if there's a reason here. And if there's not, then it's hard to say that is. IGV, a lot of call option on that yesterday. That's down 2.5%. Yeah, it's hard to have a bottom when the VIX is at 22. Trump might not go with Warsh. Well, Trump cares about the markets, and maybe if the markets get that bad and he attributes it to Warsh, he changes his mind. But I don't know, man. He had a lot of time to pick the Fed chair, and he picked Warsh. And I still don't understand why the hell he picked Warsh, but he did. So there might be something else that was there. A price target was put on SoundHound about a month ago at 16. Again, nothing but good news for them, and they are down under 8. They're going to have great earnings by the end of the month. SoundHound. Yeah, look, so I would agree with that. The problem is SoundHound trades at 21 times sales. And again, you might say valuation doesn't matter for this, but at some point, these stocks, valuation matters. Does SoundHound deserve to be trading at 21 times sales? They don't make any money, and their growth rate is good, but are they doing significant amounts of revenue to the point where they should be trading at 21 times sales on a $3 billion market cap? And then, the analyst price targets, the analysts are just people. You can slap a price target on anything. At the end of the day, it's nice to see higher price targets, but it doesn't justify the stock doubling from here. And this is the worst thing. Like, they'll have good earnings by the end of the month, sure, but Google had one of the best earnings I think we've ever seen from a large cap yesterday, and they took Google down 5%, which is the scary part about being in high beta right now. If Google can't put up numbers that gets it to pump, then how is Ondas? Ondas was $15 last week. Now it's at $8. Like, Ondas was trading at 220 times sales last week. Now it's at 118. And we were talking about this for the past couple of weeks. Is like some of these names are just getting a little aggressive on the sales multiples, and they probably need a flush out. The problem is that flush out is now affecting the entire market. Is Ondas, is this the bottom here on Ondas? Is it still cheap at 120 times sales to buy? I don't know. But none of us can be surprised at a name like Ondas getting cut in half. And if you are, I don't know what to tell you. It's expensive. It was always expensive. And momentum was the reason why it was expensive. But we should be surprised at Amazon being down 5%. That's where we can be like, what the hell is going on? And you know, that's why I don't think there's a meaningful answer for that. Robinhood loses 75. That one's getting hit. 75.04. ETH officially below 2,000. There you go, folks. 1995. I mean, if they're going to do it, they might as well rip off the Band-Aid. And let's go forward. If they're going to rip it off, rip it off. Let's do this question in the chat. Let's see what people are thinking. Let's do this question. Basent is testifying again today. Goodness. All right, so he'll be live in a bit. Simple question for everybody here. Very simple question. Because if you think we bottomed, you got to buy the dip here, right? You kind of have to. If this is the bottom. Again, last year it was 130. My goodness. Last year, it was easy to say that because Trump said buy the dip. S&P fell 30%. VIX was at 60. It felt like a proper bottom. I know bottoming is a process. It doesn't happen all at once. But last year, it was pretty much all at once, right? It was, you had Trump said buy the dip. VIX was at 60. S&P down 30. Peak panic. Boom. That's your bottom. This, like, it's hard to see the bottom in sight because you don't have any catalysts coming together to actually frame that bottom happening. Yeah, we're not even in extreme fear yet. That's the other thing we had back in November. We had extreme fear. Is it mean of me to hope this isn't the bottom? No, I don't think so. Because again, fear and greed right there. We're at 35 on fear. I think for people that want to see this go lower, as much as it's going to hurt, once again, the names that rallied in January were not the names that made money or that put up earnings. It is not me hating on those names. You can interpret it as me as hating on those names because I missed some of those names. Sure, it'd be my guess if that's how you want to interpret it. I'm just trying to be as logical as possible. A lot of those names were driven by momentum. Rocket Lab went to $100 basically because SpaceX was IPOing. And if you didn't know that, then like if you thought the fundamentals justified it, I don't know if that's like the case. Like I think a lot of us pretty much knew, okay, this is a momentum trade right now. And so if the momentum dies out, then there's probably a little bit more pain to go. But that is, as much as I hate to say this, healthy. And it's hurting me as much as it's hurting everybody else. But that is healthy for that momentum to die out, for us to reset and keep going forward. Now, maybe that momentum dies out now and Rocket Lab at 68 is enough pain from $99. But maybe it's not. And that's the hard part. Even buying the dip. Yes, Palantir is also momentum. Hood is also momentum. Not trying to isolate single stocks out here. Not trying to pick winners or losers. Just trying to say the basket of names that went crazy in January are starting to see the pain that the large caps felt because maybe the market is starting to care about something other than momentum. And maybe that's valuation, maybe that's the labor market, maybe that's something. But I just want all of us to be honest that those names were not going up because they were the greatest companies in the world. Like Ondas is cool, but it's not like for NVIDIA to be down as much as it is and Ondas to be up 5x, it's like, it's not hating on Ondas to be like, hey, well, maybe that wasn't necessarily justified. That's my point. ETH below 2,000 still. AMD 194. That's down 3. I think it's the labor market. I think so too, at least today. Stocks don't just go up because they're the greatest companies in the world. I agree. Stocks can go up for a lot of reasons. But guess what? They can also go down for those same reasons. And so if, Ondas does not have to be the greatest company in the world to go up, but it also has to be reasonable enough for the market to let it stay up. And again, some of these names just valuations got up there. Now again, maybe this really is the bottom. Maybe this is enough pain. Maybe this is enough pain. A lot of these stocks, basically Ondas got cut in half. Rocket Lab got cut by 40%. That theoretically, you would think that's enough of a drawdown. Palantir down from what, 180 in the new year, or is that 175 to 130? I feel like that's enough pain. But Palantir still is trading at an expensive multiple. Ondas is as well. Rocket Lab is as well. So maybe those multiples still need to compress more. Now, it's weird to say that because for the past 3 years, we really didn't need multiples to compress that aggressively. A, because we were leaving a bear market, right? So there was a lot of momentum to the upside. But B, because AI was so new and the growth rates were just beginning to accelerate, yada, yada. You had all these different reasons for why premium valuations were justified. We are entering a market where we don't know if premium valuations are going to continue to be justified. Even if they're already, those same names that had the premium justifications or premium valuations are down 30, 40%. Because when that happened in November, that was the bottom. We move forward. And the S&P is getting ready to test levels that we had back in November. 1.2%, 677 right now in the S&P. Some names are down 50 to 75% from the highs. We're not going down forever. Yeah, I agree. It's just, again, like just to hammer down the point, Ondas is down 50% from the highs, and it still trades at 118 times sales. That's my point. Now, again, the stock market is a real thing, and at the end of the day, algos are a real thing, and at some point, you get so below the moving averages, you catch a bid. But I think all of us are trying to figure out, is that how the market's going to work, which is basically how it's been working for the past couple of years, or is it going to work in a way where it requires a full-on reset? And I'm skeptical that we're going to need a full-on reset, but nonetheless, that's at least how the markets have been acting over the past couple of days.
Going on to start the year, and now it's consistent and confirmed in a number of reports. ADP claims, Challenger, the Rebellion numbers also out this morning, which also showed weakness.
That's a decline of 13.3K. That'd be the biggest drop in 5 years on Revelio.
Yep.
We'll see what Wednesday brings. Interestingly, within Challenger, the reasons that are being given for the layoffs, only a small slice of it is AI. It's mostly about economic conditions, restructuring, closing, loss of contract. Renmac did a nice dive into that today. So it's not like they're saying this is all about technology.
Yeah, I mean, they did put a nod to AI, but basically said it's not necessarily, it doesn't seem like it's swaying the numbers, and we're still sort of monitoring what the effect is of that. But, it's hard to know because companies aren't going to say we're laying off workers because we're using more AI. I mean, how many times have we talked to companies and they say, oh no, it lets our employees do more with less and they're more empowered with tools. So that it's out there, the sort of AI story, no question about it. But yeah, there were plenty of other reasons. Leisure and hospitality was one of the sectors, for instance. I don't see that as like the most AI using sector.
Meanwhile, you see Jolt's crossing now?
Yeah. What are they? That's what I was waiting for.
That's a big miss. 6.5 million. We were looking for 7.2 million, prior 7.1. That's a huge drop in the number of job openings for December.
And if you look at the trend of what's happening with Jolts over the last, few months, yeah, this is kind of it's an outdated number because it's a December number, right? But the trend has been fewer job openings. There it is. And now with this number at 6.5, we're still low, as you say, and it's lower job openings.
That may be more an expression of AI in some ways than layoffs, in part because, to your point, Sarah, if you are continuing to have the same number of employees, but they're becoming more efficient,
then do you need to hire more?
You simply don't need to hire as many.
Right, that's the thing. I mean, we've seen the unemployment rate rise. Let's see what we get a new number next Thursday, now delayed because of the government shutdown. But if you add it all up, there's a lull in hiring. There wasn't a pickup in firing, but now maybe there's a pickup in firing. And if you add those two things together, then you have a picture of a weakening job market. And to your point, David, does the Fed, can the Fed respond to that? Will lower interest rates cause, as they usually do, give a boost to the economy and cause employers to have more confidence and hire because of the demand conditions?
I think that's a really important point. Is there enough confidence in the broader economy to have the conditions in which we will keep hiring? The labor market data today doesn't necessarily suggest that. Google's still down 4, Nvidia 172, S&P still lows of the day, Snapchat down 11, Silver wrecked down 15. SoFi, it looks like she's going to go below 19. Meta down 1.3, BMNR down 8, 1865, CoreWeave down 6, Nursis down 10, Amcor down 1. Your safety is Johnson & Johnson and Verizon in those consumer staples. And again, do I think nibbling here to buy the dip is crazy? Not at all. Not at all. But is it the bottom? 80% of you in the chat say no. You know, people have to make their own proclamation on how comfortable they are getting into some of these names. This is the heat map, as you can see right here. Johnson & Johnson, Merck, AbbVie, those are your green names. Procter & Gamble, etc. Everything else. Even Berkshire went red today. Even Berkshire went red today. We don't have any 13Fs that are important yet. I think we'll be getting them, I guess, next week, but it'll be important to see in Q3 if some of the broader investors sold, the bigger investors sold, or if they are continuing to buy. Let's look at the SaaS names. Are they all hit? SaaS is red across. Confluence, the only one holding on. Everything else wrecked. ServiceNow down another 4%. BTC 67. Are we there? Wow, dude, holy crap. Oh my goodness. Oh my goodness. What an absolute ugly move right here. I mean, this is just wow. S&P 1.3. It looks like we're going 2% down on the day. Sailor, what is his average, guys? 74? How much is he down? Is there like a website where we could see how much he's down? I mean, I would imagine he will want to buy the dip. Right? Like, this is a round trip over the past year. Look, I think a year from now, a lot of these stocks buying these dips will pay off. I don't know if a month from now they will. And that everyone has to make their own decision. Back and forth. Is the Fed late and wrong again? This labor market data definitely makes it seem like they're late. That's for sure. That is for sure. But are they fully wrong? I'm not sure about that. Look, at some point we get a bottom. I don't know if it's today. I don't know if it's tomorrow. A lot of people, or I shouldn't say people, but historically, if you look at a lot of the midterm years, that bottom literally tends to be around October, November. 2018, it was December. 2022, it was literally middle of October. I mean, it's what happens in a midterm year. But NVIDIA is going to demolish earnings. The CapEx, we know they're going to demolish earnings. I mean, is the market just going to let NVIDIA trade at 20 times earnings for the rest of the year after they put up, by the end of the year, they're going to be doing almost 80 to 90 billion of revenue with 70% gross margins? I don't know if capital just leaves that trade and goes into what? Silver that goes up 10%, down 10% in a day? Like, that's where the money's going to rotate out of. You can't put it in money market funds because freaking, and we'll get the update on that today, but those rates are going to come down one way or the other. And unless people are happy getting just 3% on their money, and again, if NVIDIA is losing you 20% on your money, that 3% is better. But like, still, you would imagine NVIDIA is not losing 20% on your money if it's growing earnings at the level it's growing at. And that's what I think keeps this trade alive, keeps the whole market alive. Which is why I want to call BS on a lot of the selling that we're seeing, but you just don't know. You just don't fully know. Amazon will save the world. Dude, here's the thing. Even if Amazon has good earnings, if it bounces from 222 to 232, that's where it was yesterday, So it's like the price action might be kind of positive, but I don't know if it's going to be enough to help the entire market. AMD 193. down 3%. McDonald's is green. Nice little bullish candle on McDonald's. Hedge funds are exiting the long position, moving to short tech positions. There was a headline yesterday as well that hedge funds are gearing up, and they already have been gearing up some pretty long short positions on software. Yeah, I mean, look, that's fair. You know, you can look at the option flows and how the quant funds are engaging in the stuff, but I also think a lot of hedge funds were net long going into the year as well. And, you know, they are feeling the pain, but they might be cutting their losses right now. And they were levered up just like retail was levered up. Basant, let's go. He is getting grilled by Elizabeth Warren. Let's see what they are saying.
The buying power of the American people. So there is an affordability crisis, and you were front and center in it.
So let me make sure that I understand. Donald Trump is not saying that affordability, what's happening to families right now, is a hoax?
He is saying that trying to lay the blame at this administration rather than the Biden-Warren economy is a hoax.
Okay, so it all happened before he got it. And everything that's happened since then, nothing is a hoax here.
21.5% cumulative inflation.
Let me just ask about what's happened in the 1 year that Donald Trump has been president. Last week, President Trump said, quote, "We have the groceries going down." Did grocery prices drop in 2025?
Numerous prices have.
Did grocery prices drop in 2025?
Numerous grocery prices have gone down.
I'm sorry, I don't know if you can't hear me. Did grocery prices drop in 2025?
Numerous grocery prices have gone down.
Some of them.
And in fact,
So do you,
we have seen inflation at 2.1% for the past 3
Have
months.
you seen the Bureau of Labor Statistics, that is Donald Trump's own Bureau of Labor Statistics numbers, that report that grocery prices were 2.4% higher at the end of 2025 than they were at the end of 2024? Trump's own Department of Agriculture has projected that those prices would climb higher in 2026. And under Donald Trump, families are paying more and more for groceries. So if you're just going to insult people by denying the facts that are out there and tell people they're doing great when they're struggling, I think that's just another way to say you don't have a plan to bring down these prices. You're not willing to admit the failures of the Trump administration.
Senator.
I will ask you a question in just a sec here. It's not just groceries. The numbers from Trump's own economic agency show that Americans are paying more for utility bills, more for health care, more for housing construction. Families aren't fooled by these lies. Mr. Secretary, you owe it to American families to own up what's going on. And Secretary Besson, I have one more question for you while I have you here. You ran the search for Donald Trump's Fed chair nominee. And Trump promised, quote, "Anyone that disagrees with me will never be Fed chairman." Kevin Warsh got the nod last Friday. And then over the weekend, Donald Trump joked that he would sue Mr. Warsh if he failed to lower interest rates. At least I think it was a joke. But just in case, this should be an easy one, Mr. Secretary. Can you commit right here and now that Trump's Fed nominee, Kevin Warsh, will not be sued, will not be investigated by the Department of Justice if he doesn't cut interest rates exactly the way that Donald Trump wants?
That is up to the president. Can you commit that you will?
I'm sorry.
Can you commit that you will not hold up?
Be sued if he doesn't drop interest rates.
And he
won't be criminally investigated.
The president also made a big joke about you that I won't repeat, Senator Warren.
That was the
Well, actually, I will. He said he had reservations.
You know, if this was a joke, why not just say so?
It was a joke, and he made a joke about you too, Senator Warren.
Yes,
got a lot of laughs. Got a lot of laughs.
Yeah.
So I don't know if you want to respond to that.
I do want to
What I
respond.
can't
I
tell
don't
you
think
to
the American
is
people
Mr.
are
Wars is
laughing.
highly qualified.
They're the ones who are
and
struggling
why
with
don't you
affordability.
why don't you tell the nation what you told me, that you held up Chair Powell's renomination?
We're going to move on to the next one. Senator Rounds, the floor is yours.
Thank you, Mr. Chairman. Mr. Secretary, first of all,
Okay, that was quite the exchange. S&P lows of the day, down 1.45%. Well, yeah, that's happening today. They got percent there 2 days in a row. Dude. I guess they're going to continue to grill them about how Trump is thinking of policy. Palantir 128, continuing to be pretty freaking ugly right there. Bloom, that's down 10%. Rocket Lab down 7%. NVIDIA, the drawdown continues on NVIDIA. 1.49% down. 1.49% down. My mom is doing that thing where she talks over you in the car. You know, Michelle's mom, if you're listening, you should be talking over me, because the only thing I'm saying is that stocks are going down. every 2 minutes. Jolt numbers were bad. Yes, they were ugly. 500,000 worse than expected. Costco had good sales yesterday. Costco is almost $1,000. Well, why not? Costco back up to $997. Bitcoin, all right. Bitcoin's getting liquidated, dude. 66,754. Are we officially witnessing the OGs sell? Is that what's happening? I mean, this is, by the way, this is why Hood is, I mean, like, it's obvious now. Hood is getting destroyed because of Bitcoin right here. 74.15 on Robinhood. The Great Depression. Google does 50% cloud growth. We entered depression, dude. That's crazy. Absolutely freaking crazy. Yen carry trade. Well, the yen carry trade, that thing did spike. USD over JPY. That did spike. 156.65. That was at 153. That's not good either. You know, the Fed was talking about, or Besant kind of talked about intervening, even though he denied it. Kind of wish they intervened, because that would have been nice. But we need these yen rates to go down because they continue to spike up. 10-year treasury, at least that's going down a little bit. People finally going back to bonds. I mean, if they're selling stocks, they should be going back to bonds. And I imagine that would still be playing out. The 20-year, I don't know where the 20-year is right now. 20-year yield. 20-year, 4.84. That's down a little bit today, but that thing needs to keep going down. Let me pull up some other piece of data on volatility. CBO volatility index at over 2-month highs, 2253. So you're seeing the VIX continue to spike up. Trump is still live at some prayer breakfast where he's talking about things. AMD 191 right here. Robinhood almost below 74. Palantir trying to hold 129. Bloom Energy 10% down. What is a high beta name that's not getting a drawdown today? Fluence down 25. Micron, no, that's down 3, although that's not too bad. SanDisk down 2. That went from 615 to 570. Is there any high beta that's actually holding on today? Joby and Archer, those are down 8%. Galaxy's down 8. Reddit's down 3. Lilly is down 7. Lilly was up 7 yesterday. Lilly just reversed. Symbotic had earnings. GameStop is not really high beta, to be honest. GameStop doesn't actually like move that much. But yeah, GameStop is slightly green by 7 cents. ASTS, we've got to be below 100 on that. Wow, 92.30. Huh. Hims launched something today. That's the only reason Hims is holding on. Otherwise, this one would be hit. But it was up 15. Now it's up 5. Air Test Systems, that one's holding on. It's down still 3. Nebius is definitely high beta and growth. I don't think there's many high beta names, if any, besides Hims that are like actually green. Estee Lauder is down 21%. Why? Why is that down 21%? Yo, let's look at the stock draft. We haven't looked at that in a minute. I haven't looked at that since last week. This one's got to be ugly. Oh my gosh, dude. This is so bad. Matt Money is the only one holding on. I'm at 6%. Steve's at -3. Tanner's at 1.3. Chris is at -4. Matt's at 27. Rocket Lab and ASTS and SoFi are holding it down for Matt. This is so bad, bro. To be fair, mine was basically a high beta portfolio, and it was doing great when high beta was doing great. Duolingo, obviously, if we didn't have that, probably will put us at least above 15%. Steve, he got wrecked on MicroStrategy, got wrecked on Hims, got wrecked on PayPal, got wrecked on Salesforce, got wrecked on Netflix. Tanner got wrecked on Trade Desk, Coinbase, and ServiceNow. Chris got wrecked on Novo, Elf, Axon, and Oracle. I got wrecked on Duolingo. Yeah, pretty much Duolingo. The last, and then Grab's down 13, but those are the 2 biggest drawdowns. And then what's the Mac got wrecked on Dutch Bros, which is not even that bad, down 25. There you go. That is the stock draft and the updates that we're looking at. What does Steve think? Well, Steve called me last night. We talked. Let me ask you guys a question. We do have a name for the podcast. We came up with it last night. And we both actually love it. So it was very cathartic to actually finally come up with a name. I don't know. I told Steve I don't want to release the pod if the market takes a dump today because I don't know. I feel like people wouldn't want it. You guys let me know. Do you guys want the pod today? We can put it out at 7 o'clock after the market closes if you guys want it. And if you really want it, we'll put it out. If not, we can wait. But I just felt in general, people might not want a new finance podcast on a day where their stocks are taking an ugly hit. Even though I think it's a really good episode. The first guest, let me say it right now. I haven't said it yet. The first guest on the pod, I'll actually show you a picture right here. Very, very happy he took the time to do this podcast. Our boy, Josh Brown. Josh Brown was the first guest. It's a professional studio. Looks really nice. Josh crushed it. So I think you guys will enjoy it, but let me know if people want to see that today. I think a lot of stuff we talked about will help people navigate psychologically some of the stuff that's going on as well. So maybe that's why it's worth it putting out. All right, I'll do a poll. If you want it. S&P is still low, folks. 677. We need to get above 680 to have any chance of somewhat reversing. But it's still pretty bad. Oh, Bullish had earnings today. That's the crypto company. Their stock is down 5%. Okay, do you want the new Josh Brown podcast today? Silver continues to get hit, 12% down. Gold, 4,800. Broadcom's up a little bit on those Google earnings. They spiked up heavy yesterday. Now it's up 3. It was at 330. Steve is shorter than you? Yeah, he actually is a little shorter than me. So I'm saying when people say I'm 5'6", 5'5", I'm like, no, I'm a legit 5'7". With boots, it's almost 5'8". So I'm not as short as people think. Like, I'm really not. If I was 5'9", I'd be a little happier, but it is what it is. Like, but I'm not like 5'5" or anything like it, you know? 5'7" still respectable. Davis says 5'4". I'm not 5'4". Micron red hoodie, little bounce off 74 to 75.39. It's not that it's a new pod, it's that the world has changed a little bit since you recorded 2 weeks ago. Yeah, I agree. This is what I was telling Steve. I was like, bro, Steve, I just don't know if people want to listen to something like this on a day where 2 days in a row where things are ugly. You know, sometimes you just got to read the room, and it's not the best. I don't know, man. This one's an interesting one. You know, this is also testing the sort of broader buy the dip thesis, right? Like, can it be a buy the dip in a meaningful way? $222.94 on Amazon. That's still red. That's 5.7 with heels. Okay, let's get a little bit more coverage on some of this sell-off here. Let's get to a couple of different things.
Looks like this tech sell-off has been around the world, but NASDAQ futures actually now in the green. Can we say we haven't yet reached peak tech?
Not too sure. It's looking a little bit ugly here in Asia, and the poster child of the tech story, the AI story in particular, is the Kospi Index, Korean equities, driven by people like Samsung and SK Hynix. And he's having a pretty rough day here in Asia, and it looks like it's going to end badly for the Kospi there. And that really is an indication that some of this so-called healthy rotation that we were seeing in recent weeks maybe is not so healthy after all now. So a lot of people are convinced that moving out of the AI software plays into the hardware plays was really the way to go, and that was sustaining the strength in some of these markets. But we're seeing a capitulation today in Korea, where even those people who previously have been immune to some of these shockwaves, they're falling as well. So this is likely to spread around the world. And because you're seeing it affecting stocks which are very popular in the retail space, that's spreading into crypto, it's spreading into silver, and across a variety of plays that people really like to do on a momentum basis. So we're now getting into the realm of just P&L management. People are seeing enough losses in the AI software space that they're having to cut positions in other areas as well.
So yeah, it's probably helping explain some of the crypto drawdown. Let's hear from Brent Thill on the Google results and why this stock might be taking a hit.
I think it's responsible. Google's at a 15-year high on EBITDA. So last year it was the name that everyone, was their least favorite. And as we've said, they were the Toyota Camry that showed up with the Ferrari inside. It was kind of a hidden AI story, but the AI story is out now. So we're a huge believer fundamentally where they're going. I think the CapEx issue is really kind of weighing on this. To see a doubling of CapEx this year, it'll equal the GDP of Oman. It's basically the cumulative spend of the last 3 years at Google in this year's CapEx. I mean, the numbers, any way you slice it, is insane.
Right.
So that's weighing in. Are we going to see that ROI on that spend going forward? So far, we've seen ROI. We've seen incredible numbers from Google. Search is not trailed off like everyone felt. Will we just go to ChatGPT or Perplexity? We're not. What's going to happen to cloud? They now have the fastest cloud business in the industry, growing at high 40s, well ahead of Microsoft, the high 30s, and well ahead of Amazon, which is the slowest growing cloud. So, a lot to like, but the weight of this CapEx is, it's hard to fathom the numbers. I mean, the street was at like 115 to 120, and now we're looking at a 180 number in billings in this year.
So do you read it as them just essentially having their rivals on the ropes and now trying to put their boot heel on their necks?
100%. I mean, they are full offense. This is cut the oxygen off to everyone else. No question. The momentum is so incredible. And when you look at it, they have 7 properties with over 2 billion people on each of those properties. You look at the what you need for AI is data and users, and they have more data and more users than anyone on the planet. So I guess it's, as we've been saying for a while, I think that they have a hidden engine underneath what I think the frame of the car didn't look as good. And they've now literally bolted on 5 Ferrari engines on top of the one that was inside this. So it's going to be tough for Amazon and Microsoft to keep up with this. We think there's room. There's going to be room for a handful of vendors, but as we said, it's going to be that many. It's going to be, on one hand, you're going to count in 5 years the companies that define this AI revolution.
Well, you said, I mean, we were talking earlier as well on our show. It's insane. I mean, it's like a nation state masquerading as a company at this point. But that said, I did go back and look at sort of the CapEx spend for the oil companies in 2013 or the telecom companies in 2000. And as a percent of income or revenues, however you want to slice it, this number doesn't come in as an outlier. It's sort of right in line with what we saw at peak spending in those cycles as well, Brent.
Yeah, I'm not an oil guy, but I just say that. Again, I think the ROI, when everyone says, well, what's the ROI? How can you have certainty? Both Google and Microsoft have accelerated revenue and effectively improved margins. When you look at what we've seen so far, when you would think about this big investment at the beginning of the cycle, and the CEO of ARM was talking about this, that we're still early, everyone in the industry is saying the same thing. You look at what's already paid off. It's not like this is like the internet boom and pets.com and Webvan where you're seeing huge losses. You're seeing margins and trajectory of revenue improving. And that's proof that it's working. And then every major board across the globe, this is number one topic. It was never Bitcoin. It wasn't cloud. It wasn't, Web3, pick your tectonic shift. No one was talking about those until like years after. Every board globally, this is number one objective. And so, I think I don't want to overhype this. I think, again, it's going to be bigger. And I think Sarah said this well at the beginning of the show on jobs. I mean, it's really scary. I have 2 kids in college, and I'm scared. I think we're scared for the new graduates. I know the CEO of IBM has said we're going to hire more new graduates than we have in the last 10 years this year. But I think everyone is bracing. This is starting to have an impact. You can already see it in the job numbers. You can see it in the hiring numbers. You can see it in the tech numbers right now.
Yeah, I mean, coming up.
I mean, look, the argument around jobs, we're feeling that today with the labor market. It is very ugly. It is not fun to see it. By the way, guys, we'll have Stock Talk join the show in about 11 minutes, and we'll get his thoughts on the drawdown and kind of why he thinks it's happening. He's not a big TA guy, but he definitely does care about technicals. And we were talking yesterday, if the indices don't maintain some of these core levels, it's not good. It's not going to be good to see. So we'll kind of see how he's thinking about the markets as well. Shopify right there, that's down 3%. Microsoft down 3%. PayPal still down 4%. Grab's down 2%. I think, again, we're all looking for a little bit of capitulation right here. S&P basically still at the lows of the day, 677.12. As that's still down 1.3. HIMS was up 21%. Now it's up 3%. Oh, by the way, MicroStrategy's earnings call today is going to include Tom Lee. I was quite surprised by that. Tom Lee is going to be on the call. And I mean, it's like they're getting the crypto Avengers to come together. Lynn Aldrin, Tom Lee, Lawrence Leopard, and Hillary Dan. Or Dan Hillary. I don't know who that guy is, but they're all going to be like, is this like a conference? Like, it's supposed to be an earnings call. It looks like it's like a panel. Crypto. The BM&R thing is so funny, dude. The BM&R thing is really. I shout out to Will. By the way, hold on. I gotta show you guys this. Hold on. So, Will came over yesterday. He's visiting New York, and he painted this. Just crazy, bro. That he literally painted this. And so I'm going to put Will's Instagram right here in the chat as well. You guys can definitely follow. He did this for me for free. He was at the meetup and just an awesome, awesome guy. The Stock Talk said 11:10. All right, so we got 20 more minutes till he gets on. So it was really interesting, right? Because he came over, we were getting to talk, and he's big into BM&R, right? He's huge into BM&R. And I told him the same story I told you guys. For the first 2 months of BM&R launched in June until the end of August. I was basically fighting with you guys in the chat every day because it was going up, and I was like, I don't like it. I think it's stupid. He's going to keep diluting. I love Tom Lee, but it doesn't make sense. And Will was like, I was in the chat fighting with you, even though I love you, Amit, but I was fighting with you saying you don't get it. It doesn't, it's accretive, yada, yada. You got to get into it. Ethereum's the future, yada, yada. And then, at some point, I'm a human being. When I see the thing keep going up and I see the chat every day saying, no, Amit, you don't get it. I'm like, maybe I don't get it. Maybe I'm an idiot. And that's when I bought it. And it was a lesson to me to remember, sometimes you got to stick with your intuition. Because the number one problem I had with BM&R, and I don't even understand crypto that well, it's just, it's not even about Ethereum. It's the nature of the dilutive aspect of it always felt odd to me. Now, BM&R didn't collapse because of that. BM&R collapsed because Ethereum collapsed. So that was not the reason why it went down. But at its core, that's what I didn't like. But at some point, and I was talking about people who bought Fluence or Bloom 3 days ago when it was up. That was basically me with BM&R. It's like I kind of gave into the FOMO, gave into the pressure, and said, no, I'm going to get into it. And as a result, you have to deal with the drawdown. And not saying your intuition is always right, but sometimes if your intuition is like, no, this is stupid, you got to be able to fight off and I think that's why this year, at least in January, I've been better at not buying into an Ondas at 15. Not because it's a horrible company, but because maybe it doesn't deserve to be worth that much that quickly. But everyone's immune to it. Everyone, Bill Ackman sold Netflix at the bottom. That's how much pressure he was under. You talk about pressure from other people, pressure from seeing thousands of comments about getting into a name or getting out of a name. He was under pressure to sell a $400 million stake of Netflix, which would have turned into $4 billion because it went on to 10x at the absolute bottom. So everyone has to deal with this shit. And I think over time, you just learn how to navigate it in a more positive way. But, these are the experiences. There was Netflix right there at around 100 or 17 at this point back in July of 2022. Where that plays out. So, I don't know, man. Everyone has one of those names. If it's not BM&R, I know a couple people that are bag holding HIMs pretty heavy from 42. Obviously, Hood has taken a big beating. AMD, plenty of people probably bought in at 230, 240 last week, seeing a run above 260. It literally hit 265, which was $2 away from all-time highs. Now it's at 192. NVIDIA got a lot of people to buy in last week at 193. Now it's at 173. This is the nature of when things correct, they correct. Nate says, we'll see Nebius all-time high this year. I'm not phased. Well, that's the other thing. If you have real conviction in your names, you just don't care. And I think plenty of us have conviction in names, but what we don't have conviction in, or at least what I don't have full conviction in, is the macro. Because you're trying to figure out exactly why and how this is happening and how this is playing out. What I will say is I do think this sell-off of SaaS is utterly ridiculous. Maybe the crypto stuff is justified, even though I don't really think it is. But the SaaS stuff to me is just kind of stupid. And I don't know, hopefully this one ends up not being as ugly. By the way, there is inside of the chat, I'm putting Will's Instagram, if anyone wants to check him out. Really, really, really talented guy. And he's the one who drove or painted the the Steve holding a cow picture as well. So, I mean, this is really cool. This is really cool. You guys can follow him there on Instagram. Are we in correction territory yet? No, we got to see 10% on the S&P to see correction territory. Do you still have BM&R? Yes. Still have BM&R. Broadcom up 2. Broadcom somehow holding green, even in the face of all of this. Google still down 5. Broadcom 313. S&P, I think we're very close to the low of the day. 675.94 was the low. We're at 676. We're at 676. Trump is making a 7 p.m. announcement today. I don't know what it's for. Novo says they're going to take legal action against HIMS again. Maybe that's why HIMS started selling off. HIMS right there up 3%. But I don't know what the 7 p.m. announcement. It's a prime time announcement. So that'll be like on CNN and Fox and all that stuff. Last time he did this, it was a campaign speech. So I wonder what it's going to be this time. Is he still live at the breakfast? There's no way. It's been like 3 hours. Okay, it ended. It ended. He was live for 2 hours, though, in that breakfast. He's telling us his Super Bowl picks. Maybe that's what he'll be telling us. Let's put up a couple other things right here. Cerebras, again, they're going public for their IPO. Trump did say yesterday he's not going to be interfering with the Netflix thing. So he's going to let that play out without any issues, or he'll let the FTC handle it. Get a little bit of coverage here on Tesla. See what ARK is saying about Tesla as well.
Big headline for me was the capital expenditures commitment, $20 billion this year. As you know full well, it's way beyond what they might do in a typical year. So let's start with that. It's clearly a signal that these things that Elon Musk has kept you guys looking to the horizon on for some time, now it's on paper. It's time to act.
Yes. Well, I think the capital expenditures are not too surprising to us. We had fairly aggressive investment estimations in our public valuation model. But that's all to say, I think the next 5 years for Tesla will be dominated by the robotaxi story. We've previously published, we think this could be attributable to over 90% of the enterprise value for the company in that time period. And, in order to put many vehicles on the road, which is their plan, they need to invest. Of course, a lot of the money is going into factories, AI infrastructure build out. So, I think that the story here is that Tesla, while they were, second or behind Waymo in terms of a commercial launch for a robotaxi platform, they have an incredible scale that is really not matched by anyone in terms of the public announcements that they've made of putting actual vehicles on the road.
Right. On Terafab specifically, you and the team at ARK know full well, a fab at that scale is a fixed cost of $20 to $30 billion. And the CFO was clear, this is not reflected in their CapEx forecast. But there's a reason that the industry doesn't put memory, logic, and packaging on one site. That doesn't exist, but it is Musk's proposal. How seriously are you taking that?
Well, I think, he's always been a very ambitious CEO. I would interpret this as, look, he's concerned Tesla needs a lot of chips. They have grand ambitions for AI data centers in space. We think, that could be a really interesting play, especially as launch costs continue to decline. It could actually be cheaper than terrestrial, than data centers on Earth. So, I think the way to interpret it is that he knows that he needs a lot of chips. We've seen him vertically integrate in the past in the electric vehicle business, for instance, and parts of the supply chain that he did not see popping up in the U.S. that they needed in the U.S. So, I think this sort of fits in with what he's done in the past, albeit, yes, it's a major announcement for Tesla. So I'd say broadly that, like, I would interpret some of it as a call to action that, he is looking out there at the supply chain, but
obviously Tesla's gotten hit pretty bad since this came out a week ago. The data center and space thing, again, Elon, there's some, hold on, I got to show this as well. There's some Elon new content around data centers and space. I believe him on the science and the technicalities that it's going to be really important, but I'm sorry, I also think it's a story that he's trying to sell to pump up the SpaceX IPO, which he should be, because you got to give a narrative to make the IPO worthwhile. I just don't know if it's going to be happening anytime soon.
On the ground than it is to scale in space. Any given solar panels can do about 5 times more power in space than on the ground. So it's actually much cheaper to do in space. My prediction is that it will be by far the cheapest place to put AI will be space in 36 months or less, maybe 30 months.
36 months?
Less than 36 months. You can mark my words. In 36 months, but probably closer to 30 months, the most economically compelling place to put AI will be space. And then it will get like ridiculously better to be in space. Once you start thinking in terms of what percentage of the sun's power are you harnessing, you realize you have to go to space. You can't scale very, very much on Earth.
But by very much, to be clear, you're talking like terawatts.
Yeah. Well, all of the United States currently uses only half a terawatt of power on average.
Yeah.
Right. So, if you say a terawatt, that would be twice as much electricity as the United States currently consumes. So that's quite a lot. And can you imagine building that many data centers? I mean, that many power plants? It's like those who have lived in software land don't realize that they're about to have a hard lesson in hardware that it's actually very difficult to build power plants. And then you don't just need you need power plants, you need all of the electrical equipment, you need the electrical transformers to run the transformers. Have you ever tried to do an interconnect agreement with a utility at scale, like with a lot of power?
As a professional podcaster, I can say that I'm not, in fact.
Yeah.
Can't you solve this with your own behind the meter power stuff?
That's quite the laugh. I know I have a laugh, but that's quite the laugh.
You can build power plants.
Yeah.
That's what we did at XAI. For plus is 2.
Why isn't this a generalized solution?
It's very difficult to scale other forms of power. You can scale potentially solar. Solar cells are already very cheap. I think solar cells in China are around 25, 30 cents a watt or something like that. It's absurdly cheap. Now put it in space and it's 5 times cheaper. In fact, no, it's not 5 times cheaper. It's 10 times cheaper because you don't need any batteries. So the moment your cost of access to space becomes low, by far the cheapest and most scalable way to generate tokens is space. It's not even close. It'll be an order of magnitude easier to scale. 5 years from now, my prediction is we will launch and be operating every year more AI in space than the cumulative total on Earth. Yeah, I think towards the end of this year, I think probably chip production will outpace the ability to turn chips on. The chips are going to be piling up and won't be able to be turned on.
How do you design a chip for space? What changes?
Well, I guess you want to design to be more radiation tolerant and run at a higher temperature. Roughly, if you increase the operating temperature by 20% in degrees Kelvin, you can cut your radiator mass in half. Running at a higher temperature is helpful in space.
All right, so Elon is going pretty heavy with this AI in space narrative. Less than 3 years, he's arguing, you will see AI data centers officially in space. Maybe it's an Elon timeline, maybe not, but that is the story I think that's going to pump the SpaceX IPO and get a lot of people to believe in the market opportunity that's there. Sam Altman just tweeted, the companies that succeed in the future are going to do very heavy use of AI. People will manage teams of agents. Today, we're launching Frontier, a new platform to enable these companies. It uses Codex to power agents built by companies, third parties, or OpenAI, and makes it easier to securely manage with agents get access to what? Oracle, Uber, State Farm, Thermo Fisher, Intuit, HP are some of the first new partners, joining partners like T-Mobile, Cisco, and BBVA, who have already piloted a lot of the approach. So this is their competitor to Anthropic's Cowork. And you're starting to see the foundation model companies recognize that the enterprise is going to be the most important spot for a lock-in effect, for somewhat of a moat, for like actual revenue, and to build enterprise workflows that actually lead to something sustainable going into the future. And so it seems like Sam Altman is going down that direction as well. All right, folks, let's bring someone on to the show who I think will hopefully be able to give a lot of thoughts and ideas around how to navigate the market turmoil that we're seeing right now, and kind of how he's thinking about how the market's going to play out for the rest of the year. Ladies and gentlemen, a fan favorite, Stock Talk.
What's going on, guys? What's going on? Oh, man. What a day, huh? What a
little
day.
Ugly.
Yeah,
Ugly.
Definitely ugly. And even getting some of those rotation sectors from yesterday, even getting tossed today. I'm getting caught up in the selling as well. So that doesn't make it any better in terms of finding spots to hide. Only things I see green really are staples a little bit, home builders a little bit. I mean, home builders have had a nice couple of days, but I imagine most people are not full ported on home builders. Maybe there's a couple of people out there, but I imagine most people are not. You had blips of strength yesterday in industrials, XLV, a couple of other areas like that. Transports. Those are mostly red today. Most of the market is red today. Some spots are green. Obviously, we have Walmart pulled up there, Broadcom. In my portfolio, there's not much. Viavi, Thurman Group. That's about it. PLPC. Pretty much everything else down. So, yeah, not a great day for me either. I imagine most people who are positioned in stocks that have been winning stocks for the last 7, 8, 9 months, you haven't had a good week. If you're in stocks that have been losing stocks for the past 6, 7, 8, 9 months, you're probably having a good week. And so it's really a matter of perspective, I think, and zooming out to see how well you're doing. Now, that doesn't always help because, if you're oversized on something, even for me, I mean, I was very much oversized on ENS, which is down 10% today. And so that's going to hurt my portfolio. So, yeah, I mean, there's always going to be positions in the midst of this kind of stuff that catch you off guard, or get the type of earnings reaction you didn't think they were going to get, or get caught up in the selling, or babies getting thrown out with the bathwater. All that sort of stuff happens in a market environment like this. So we're seeing quite a bit of degrossing early in the year, and that's not a great sign generally. I mean, we saw this, rewind your minds back to February of last year with the DeepSeek moment. And then a month later, we saw further selling. And then a month after that, and Liberation Day, we kind of saw an eclipse to that selling where we had a brutal 2-session event and then a massive rebound. So maybe we're leading into another one of those types of events. But
well, let me ask you this, because last time that happened, tariffs, talk of tariffs, climax of Liberation Day. I want to get your thoughts overall. Why do you think we are seeing this type of deleveraging across the market? Obviously, S&P has been hit the least compared to individual stocks. But if you had to pinpoint 1 or 2 or 3 reasons, why do you think it's happening?
That's tricky. It's always tricky to put your finger on it, but I'll name a couple things. So first of all, a lot of people said that the Warsh appointment wasn't going to be a factor because he was the favorite going into the appointment, right? So they were like, look, markets should have priced this in. But he was the favorite on Polymarket. I don't know if I'm of the belief yet that, as new as these prediction markets are, that the $70 trillion equity market fully prices events around them.
Right.
I think that there are cohorts of investors that look at data like that and react to it. Certainly. I'm not saying that people ignore it, but can the market as a vehicle price things in fluidly with Polymarket odds yet? I'm not sure about that. So that's point 1. Point 2, Warsh is not really, I don't want to say he's not a crony because, I mean, I imagine Trump did these interviews with the intention of finding somebody who would agree with him on rates, but he is a former member of the Fed that has had nuanced opinions on monetary policy before, right? There's been times where he's been hawkish. There have been times where he's been dovish, if you go back to the financial crisis. And so I think the market, when you look at that precious metals rally that we saw, the historic precious metals rally that we saw with gold being over 5,000 and continuing to rally, silver having a monster move, was largely a currency debasement trade, right? And I think a lot of the momentum and growth sort of followed that same narrative. And so with that appointment being finalized, I think there was a little bit of a hiccup in that narrative where people said, okay, maybe things need to be calmed down and repriced a little bit out of this massive currency debasement expectation that's been in the market. And then you saw a meltdown in silver, which is really sort of what started this greater meltdown in momentum that we've seen in the past couple of sessions. So I think that's part of it. I think the other part of it is just the amount of uncertainty that has built up over the course of the last several months, both geopolitically and in terms of policy, right? A lot of people were betting on a lot of pro-growth policies from the Trump administration to be followed through on. Some of those have come through, others have not. And now we're heading into a midterms where there's a lot of political uncertainty. Forget about geopolitical uncertainty, but just political uncertainty about what the results of the midterms are going to be, if the Trump administration is going to retain policy power emerging out of those midterms. And so that complicates expectations as well. And so it's not always, I think, when markets go down and you see periods of volatility, I don't think it's always negative sentiment. It's often just a repricing of existing expectations. Like the bar moves, and then markets have to reprice their expectations according to that. So I think that plays a factor, geopolitical and political uncertainty domestically. And then on top of that, I think the situation in Japan is still looming in the background. The uncertainty with the situation in Japan and Japanese yields is still looming in the background. I think there's been a difficulty, broadly speaking, in terms of inflation expectations, right? Inflation has cooled off, but who's to say that once we do start aggressively cutting rates, if we do, when the new Fed chair comes in, that it won't reemerge as a problem. So you have 6 or 7 theaters of geopolitical uncertainty. You have monetary policy uncertainty. You have political uncertainty, and markets are up 3 years in a row, basically in a vertical line. So it's easy at this point for markets to take some energy off the top, I think. And I think that's really what we're seeing broadly. I mean, there are probably a handful of other reasons you can throw into that basket, but it's never just one thing, in my view. It's never just one factor that's driving it. And I think the meltdown in crypto, which, by the way, preceded any kind of negative action in markets, I don't think that helps with speculation either, right? I don't think that helps with speculative appetite to see this meltdown in crypto either. So there's a lot of factors at play here. Obviously, it's not what I want to see. I am definitely in a bullish stance right now in the market. I know you are too, Amit, and I know probably most of your audience is in terms of their exposure to the market. So it's not something we want to see, obviously. No one likes seeing drawdowns, but drawdowns are part of the game. I'm sure we all saw a big one last year during the April sell-off, right? And that turned into a fantastic year emerging out of that April sell-off, right? And that was already 4 months of room, 5 months of room gone going into that sell-off. You could have done nothing all year and just bought stuff in May and made out great, right? And so is it the end of the bull market? I wouldn't say that yet, but we have to keep monitoring technical structure, I think, and looking at the major indexes and looking at the charts in the major indexes, which, I mean, on the Qs don't look great, right? It doesn't look particularly.
That's another thing I was going to ask you. We were texting about this yesterday. You are relatively strong at looking at entry and exit points via TA, and I think you understand a decent amount around sort of volume resistance and how that plays out. What are you seeing in the technicals, and are there certain levels that if we don't get above soon, it's kind of setting up for a 2022 scenario again?
Yeah, I definitely see that. I posted in our community this morning too that I was like, hey, there are 2022 signals that are starting to come out now. I wouldn't jump onto that narrative yet and say this is going to be 2022, but there's a lot of factors that were different now than there were in 2022. You look at 2022, tech was sort of just a momentum trade, right?
Yeah.
Keep in mind, 22 was pre-AI, was pre-ChatGPT moment, right? And so it was just tech was just really speculation at that time. Now there is something to ground it on, right? I mean, AI is real. Whatever you believe about the ROI, now that's a separate conversation, right? But AI is certainly real. And so you can kind of rest your laurels on that a little bit. The other big difference with 22 is rates were going up, right? Rates will be coming down this year. So that's a big difference. But economic softness does matter, right? I mean, we've seen many a time in previous cycles where markets do go down headed into rate cuts because the economy is also faltering in the background. And that Challenger jobs report we got this morning was not great. It's actually one of the worst ones we've gotten since well over a decade, since 2009. So highest number of cuts for January since 2009. And then you have new hiring plans at just 5,300 jobs, which is not a lot of jobs, right? So that's the lowest.
And then we lost 500,000 jobs on Jolts.
Yep.
An hour later. Yeah.
Yeah. And so Jolts didn't come out great either. Challenger's not great. And then, your upside on new hiring plans doesn't look great either. And you look at some of these big chunky layoffs, like the UPS report that was cited, the Amazon report that was cited. Those are big layoffs. It's hard to fight the trend against those. And then on top of all of that, you have AI serving as a tailwind to these layoffs. 7% of layoffs attributed to AI. March rate cut odds, I saw that jump on the screen, are going up. That is a good point too. But I think the difficulty with the market reacting to them right now is the Fed behind the curve again? Now, March isn't far away. That's, I guess, a positive, right, to think about. It's only a month and a half away. But at some point, you will see a capitulation bounce here in momentum, right? I mean, yesterday we had a 4 standard deviation move in momentum to the downside. That's historic. The funny thing is you'd think you see those every once in a while, and the last one was just a couple of years ago. So this market's getting more and more volatile by virtue of instrumentation, I think. You look at 0DT exposure. We talked about this on your stream a few times ago. 0DT exposure through the roof, right? So when you have that much short-term options exposure in the markets, you're going to get really, really brutal wipeouts because people are so heavily allocated to the short-term move. Short-term move goes against them. People are getting wiped out, right? I mean, you have to imagine there have been people that have been absolutely wiped out in the last 2 weeks of action. I know good traders that I think are good traders who are not only negative year to date, but who have given back a significant portion of last year's gains, right? And it's only been a month and 5 days. So it is a very, very tricky environment, and it's a tough environment to navigate. I've given back a lot of gains. I was at like 48% like 2 weeks ago, and now I'm at like 30% on the year, which I'm still proud of that. I mean, I'm still happy to be up on the year, but brutal drawdown for me too. So I think that there has to be a recognition that the market is volatile, that we've seen these moments of volatility during this bull cycle, and that you have to remain optimistic until there are really, really severe breakdowns. So as far as your question about where the levels are, I would look to this weekly chart. So I would look to the weekly chart on both the S&P 500 and the Qs. And for the S&P 500, we are still, despite all the noise, still holding structure just fine. The S&P 500, what you really don't want to see is a weekly close below 672. And for now, we're trading 677. So that should give you some perspective. You pull up the weekly time frame there, on that chart, and you should be able to see this line pretty easily. Pull up. Do you have your EMAs on here?
I think you should share your screen. That'd be
okay.
easier.
Let me do that. Let me get rid of all these things. Pop.
By the way, guys, Bitcoin still getting hit right here. We're seeing a very slight bounce on the S&P, but again, it's ever so slight. And yesterday we saw, many bounces that ended up getting rejected pretty quickly. Netflix still green, Broadcom still green, Google continuing to get hit by about 5%. Palantir, that one's still down 130. Yeah.
Okay, did the screen share pop up on it?
Yep, you're good.
Okay, perfect. All right. So you guys can see here, this is basically your bull market trend line, this 21 EMA here on SPY. And you can see back here, even we touched it, rebounded. And so we're right here. So in terms of caution, signals of alarm, there's more in momentum than there is in the actual S&P 500. You need to lose the 672 spot and get a weekly close below it for it to actually, in my view, be concerning. Now, the problem is that QQQ is already breaking that line here. And I would say in a normalized index composition 10, 15 years ago, when the S&P 500 had far less tech composition, this wouldn't be as much of a concern. But because the S&P 500 is so heavily weighted tech, you don't want to see this on the Qs either, right? Because as you can see, the Qs have done a good job of defending this spot as well, right? And this is the reason I'm going back 9 months is this is where we bottomed last year, right? So this is after the April sell-off. Then we came up here and then we recovered, and this is where the market recovered. And then you had this uptrend all the way, right? And most of it was respecting this 9-week EMA. But then you saw these blips, right, where we come down and touch the 21. So that's really why I'm putting focus there. And we are cracking that today on the Qs. So I think it's probably a saving grace that SPY is holding here at 672. But if you lose that, let's say into the end of this week, as in tomorrow, or into the end of next week, that'll be concerning. So that's, in terms of levels, that's what I'm looking at here, 672 SPY. And then we're hoping for a recovery back above 605 on the Qs. And I think you can really keep it that simple. You know, I don't put a ton of complication into my TA. I just use moving averages and volume. I don't think you need much more than that to follow the market as a guide. But I'd like to see that recovery on the Qs above 605, and I'd like to see the S&P 500. And you can see here on the daily on the Qs how we're punching through the 100-day for the first time, right? So this is the daily, not the weekly, but you can see here, we defended the 100-day on this consolidation period, and then now we're knifing through it, 3 consecutive red candles and then falling in here. So you'd like to see a big reversal on the Qs either today or tomorrow to recapture 605, and that's not a big move. I mean, 599 to 605 is not a big move. I don't know what the percentage is on that, Amit, if you have a calculator on hand, but whatever, $6, like 1% move, right? So
yeah, 1%,
roughly 1% move. So yeah, I mean, that's what we'd like to see. We'd like to see a retake of 605 on the Qs, and we'd like to see SPY hold that 672 spot. And you can see here on SPY right here corresponds with the 100-day as well, which we are defending intraday here at 676.
Are you, do you think there's still a Trump put on the market?
That's a complicated question. I think Trump wants the market to go up, but I think just saying, hey, pump the market, you know, or just like saying nice things about the market, I mean, that only has so much efficacy, right? I mean, like it works when there's liquidity, right? And all of this is really a function of liquidity. Like babies getting thrown out with the bathwater, the ability for markets to rotate. Like remember last year we saw blips of rotation during the year, and it was just fine. The breadth expansion was just fine because there was plenty of liquidity to absorb it. Now, in this kind of market environment where you're seeing a washout in momentum, a washout in precious metals, a washout in crypto, right? Where's liquidity going to come from? Like you can say, you could try to pump something in this market environment. It probably won't work very well. And so I think that Trump probably recognizes that, and also probably recognizes that midterms are coming up. He probably doesn't want markets to be going down into the midterms, but keep in mind, it's momentum mostly and speculation that's getting washed out. The S&P 500 is not down a lot. And so he's probably looking at the S&P 500, I imagine. So, you know, he talked about it on his last speech. He was like, the S&P 500 hit 7,000 for the first time, right? So I imagine he's watching the S&P 500. Besant probably has a wider eye on markets, but I don't know. I mean, is there a Trump put still? I think in theory, yes. I just don't know if it's as efficacious as it was last year because there was plenty of liquidity last year to respond to it, right? And a certain point, you begin losing the incremental buyer. So that's where the concern becomes. But we have to just, I think, stay optimistic until we see a breakdown in the S&P 500. Like that's the point at which I would be willing to flip my bias short. But we're not there yet. You know, as brutal as the momentum selling has been, we're not there yet. And I know it's hard to stay patient amidst all this. People are like, my stocks are down 15, 20%. Like, how do I batten the hatches? I know the S&P 500 is only down 1%. It's not necessarily me saying, oh, the S&P 500 is only down 1%. Don't worry. I get that stocks are down more. I have stocks that are down way more than that too. Manage your risk accordingly. Like if you're hitting your pain points on stocks or on options, manage your risk. I'm not telling people not to manage risk, but what I am saying is when you should get really concerned is when you have momentum falling off cliff and the S&P 500 is breaking down. Yeah. And we're not quite there yet on that second part of that equation. So be patient if you can afford to. I know some of you are like way too over levered in short-term options and are probably really, really feeling the pain. You know, I feel for you. I've taken a huge drawdown too, but try to keep an optimistic attitude until the S&P 500 breaks down the weekly chart. That's when you should start getting defensive, I believe. So we're not there yet. We're not there yet. And again, even today, intraday, we're seeing some rebounds on a lot of individual stocks. So, maybe that changes. I mean, I'm looking right now, and Amcor just flipped green, THR is green, PLPC is green, VAB's almost up 5%. We're seeing a couple of V-shaped moves off the lows. So, maybe there's semblances of people wanting to buy the dip here, but I'm looking at the indexes right now. Every major index is red, including the rotational indexes. So
let me ask you about the high beta names. So
yeah,
they all went up like crazy in January, and your portfolio has some high beta. You have the Nebius Hood, but you got those, when they were $20. So your cost basis on those have really helped manage probably a lot of the drawdown, which is, I know, something you talk about a lot. Ondas was at 15 last week. It's at $8 today.
Yeah.
Fluence was at 33. It's at 24. Like, do you think some of the high beta names that were trading at 7,000 times sales needed a correction?
Yes.
And do you think that is also contributing to the overall delevering of the broader market right now?
Yeah, because some people are exposed to those names, right? And even some fast money funds are exposed to those names. But yeah, like, look, guys, I talked about this, I think, on the first stream I came on with you last year.
Yeah.
Where I said, look, if you own names that are trading at 100 times sales, there's going to be a moment where you get clobbered. I mean, in December and November, October and November of last year, I was talking a lot about this on Twitter, on streams in general, saying like, hey, rotate to reasonably priced names. They're going to hold up better. They may get caught up in the selling, but you're not going to get absolutely obliterated on them, right? You're not going to see 50% drawdowns in a week, right? And when you look at the reasonably priced names, they have held up better. They haven't had 50% drawdowns in a week. Some of them gotten hit 5, 10, 15%, but they're not going to fall apart completely because there's some sort of valuation floor. So I think for people who are tired of the volatility in the past 6 or 7 months, who are tired of like the 20% moves up, 20% moves down, the simplest thing you can do for your portfolio and your sanity is to own some names that are trading at reasonable valuations. And by reasonable valuations, I mean 1 or 2 times sales, 20 or 30 PE. That's what I mean by reasonable valuation. And, I don't mean like 55, 60 PE, 23 times sales. That's not what I'm talking about. But some people think that's a reasonable valuation because they've been spoiled by valuation metrics in the past 2 years. Like, I mean, traditionally reasonable valuations, right? Like growing profitable companies that are trading at 15, 20, 25 PEs, 1 or 2 times sales. Those are going to hold up better. Again, they will get caught up in the selling at a certain juncture, but they're going to hold up better. And I think that's one way you can save your ass. Another way is just having less options exposure on the table in general, because options, just magnify your beta as it is. So that's another way. I'm personally, if this selling keeps up into tomorrow, I'll personally just be trimming some options exposure.
So I was going to ask this. You do have some hard rules about when you have a drawdown, how you navigate the position.
Yeah.
Are there any things where you think 10, 15% down, you're out, or is it more so trimming because your cost base is so low? Like Hood. Let's talk about Hood. You got in at 20.
Yeah.
It's at 78. It sucks being down from 150. Is there even a thought in your mind of, let me get rid of some equity, or how are you thinking of that?
I mean, I was trading at about 30 PE.
Yeah, that's true.
No, I'm not going to sell into that. Now, Robinhood's an investment for me, so I think about it differently than I do think about other trading type of positions in my portfolio. Like, no, I'm not going to sell Robinhood. In fact, it goes back to the 30s or 40s. I will just buy more. If there's a flash crash or something, I'll just buy more. So, no, with Robinhood, I have no plans to sell it. There are other stocks in my portfolio where if they keep breaking down, then yeah, I will become a forced seller. But is it fun to see a stock draw down from 140 to 170? No, but I do think at 140, it was getting a little long in the tooth in valuation.
Yeah.
So it did need a little bit of a correction. Did it need a correction to be cut in half? Probably not. But, did it need a little bit of a pullback? Sure. And I feel the same way about like Kratos, which I've owned since the 20s too, which went to the 130s and now is like back to the 70s. Like, I think that needed a little bit of a correction too. Like, look, you can be extraordinarily nimble if you want and try to short your own stocks when they get to really high valuations or sell covered calls against them, and manage your cash flows against those positions. But, those positions are 2, 3, 4% positions for me in the overall portfolio. I don't feel the need to do that. Some people who they're bigger positions for, if they're an 8 or 9 or 10% weighting for you, yeah, you probably should be doing that. You probably should be selling covered calls against those positions when you feel they're overvalued. But I think the lesson the market has taught a lot of new traders and investors, and even me over the last 6 or 7 months, is like, hey, if you're holding a stock and it gets to a point of being overvalued, take some off the table, you know? Yeah. And that's an important lesson, I think. And it's also the fact of like paying attention to valuation constantly, which people don't. One thing you hear a lot is it's a good company, I'm just going to keep buying the dip, or it's a good company. And I was tweeting about this yesterday. Like, that's not an investing philosophy. A lot of companies are good, but you can't buy them at any price. You know, the way there's a misnomer about dollar cost average investing. And last time I came on your stream, I talked about the fact that I don't DCA, and people were like, oh my God, like what a crime. If you do DCA, you can't use blind dollar cost average principles with individual stocks the same way you do with the S&P 500. That's not how it works.
Yep.
With the S&P 500, you could buy every dip, and in 10 years, you'll probably be fine. But with a stock, that's not necessarily true. I mean, you know, before 2019, Microsoft had 17 years where the stock traded relatively flat, almost zero shareholder return. 17 years, right? Like, imagine dollar cost averaging through that, just ending up flat, right? Like just dumping capital into it for 17 years and then ending up flat, right? And like, or Intel, 12, 13 years, 14 years, or 15 years, right? Like, there's so many examples of this. There's Adobe. I mean, I can think of probably 20 examples if I really gave it some thought. But there are stocks that trade flat for decades at a time, a decade, 15 years at a time. If you dollar cost average to those, that's a huge forfeit of opportunity cost. So you have to be careful about DCAing. You have to do it strategically, in my view. You have to not be doing it with individual stocks. A dangerous game. I really do believe that. And there's going to be people that push back against that. That if it's a quality company, if it's a good company, I'll do it. I just think people misunderstand what a good company really is and what a good valuation really is. And they keep dollar cost averaging in perpetuity, even when the valuation becomes very, very stretched. You know, if you listen to the greatest investors of all time, Druckenmiller, Lynch, Buffett, they're not buying at any valuation. They all have valuation constraints, right? They're all investors to a degree, but they all have valuation constraints. And they all have points at which they won't be buying a stock, they'll be selling it. And so that's an important thing to recognize, I think. Nice recovery so far in SPY, actually. 680 now we're trading.
What is your take on the SaaS carnage, and do you think it's justified? I know you're not invested in a lot of SaaS stocks.
I think it's justified, but I think it's overblown in the short term. Right? So what I would say is that I think if you look at SaaS over the next 10 years, is there going to be AI disruption? Yes, meaningful AI disruption. Is it going to disrupt enterprise level software that is deeply embedded? Probably not in the short term. But the tricky thing with SaaS is that what's the runway then, right? If you think disruption is 10 years away, 12 years away, 6 years away, whatever, what's the, like, if you're an institutional shareholder of SaaS, or if you're a very long-term oriented retail investor, what is the runway? You have 4 years to make some money before the disruption happens, 5 years, 6 years, 7 years, 8 years. I mean, it's anyone's guess, but that's why I think you've seen such weakness in SaaS, is that like people don't know what the runway is, and the market's trying to figure that out. Like, I imagine that there are institutional entities calling a lot of phones in the past couple of weeks saying, hey, what is your threat level? What's your exposure level to AI? There was an article about this yesterday, actually, that, you know, a lot of institutions are literally calling management saying, hey, do you think you can be disrupted? Like, is that a possibility in your view? And obviously many of the management teams are saying, no, of course not. We're enterprise integrated. You know, we're not a vibe coding software. And I think this vibe coding thing is sort of an understatement of the disruption potential. You know, you look at that term and what people really say is like, okay, you know, people are vibe coding bullshit apps and you know, it's not going to really matter when it comes to enterprise level software. At a certain point that changes, right? At a certain point, the coding infrastructure becomes more and more sophisticated, and these AI products can deliver better and better code and more sophisticated code review and more sophisticated debugging. That's a matter of time, not like capability. And so that's a concern, I think. Like, I know a lot of people want to play hero here and like buy the dip on SaaS. I'm not saying it's a terrible idea. I think in the short term, the selling is overdone. But is it something that I'm interested in doing? Probably not, because I don't know what the runway is. And I don't know how long it's going to take for these companies to actually be able to brush off all of the concerns and just return to a meaningful bid to the upside, right? It would be very difficult, in my view, for enthusiasm to just return to software and the software stocks start ripping again. It'd be pretty hard to pull that off, in my view. So that's one.
You're not attracted to Adobe or Salesforce or any of those names, just even on a valuation momentum drawdown perspective. You think there's a structural issue with those companies?
I think there's a narrative issue. And I think that narrative issue is going to be really, really hard to get up from under itself unless AI just disappears, which I don't think that's happening. So, yeah, I think you're going to see blips of recovery. I think there's trades to be made. Certainly, I think there's trades to be made on oversold conditions in software. Names like Adobe, you know, I think are interesting. I mean, even names like PayPal, which I guess is indirectly software, but more so fintech. I mean, that thing's trading at what, like a 7 PE now? Like,
wow, it's below 40. There it is. Yeah.
Yeah. I mean, I don't own that name, but like that name is also like, I was looking at it yesterday, like, dude, is this too cheap? Like for PayPal, is this just straight up too cheap? I don't know. Yeah, there are names that I'm looking at that I'm like, hey, these are really, really interesting. And I think the valuations are really, really reasonable, but it's tough because I don't know what AI is going to look like in 3 years. And I don't know how advanced it's going to be and how disruptive it's going to be. So it's really, really
what's
tough.
Your take on what's your take on this? If AI is so destructive for SaaS and it's going to wipe off trillions of dollars of SaaS, why isn't NVIDIA, Broadcom, AMD, Google, Microsoft, all these names getting a massive bid because they're going to need more compute, more cloud, and more hyperscaler spend?
It's a good question.
It's not illogical to say that, though, right? If ServiceNow goes to zero, Microsoft should.
No, it's not illogical. No, you're making a good point. And what I think is that it's probably just spillover selling. Like, I mean, you look at IGV was kind of the cue ball, right? If you look at this year's kind of turnaround in momentum, IGV was kind of the cue ball. You saw this big weakness in IGV. Then you got the precious metal sell-off day, which led to more weakness in IGV. And you had like 6 or 7 sessions in a row of selling in IGV. Absolutely buried that thing. And then the selling started bleeding over into the Qs and into broader tech. And like you said, even tech hardware. So I'm not sure that there's much of a narrative link between the selling in tech hardware and tech software. I don't think there's much of a narrative link there. But at a certain point, if you extend software to companies like Microsoft, right? You extend the software and enterprise software narrative to companies like Microsoft, then the question does become, if their stocks go down and their ability to sell enterprise level software goes down, does their ability to purchase hardware also go down? Does their CapEx, does their ability to spend CapEx? I mean, like, if you're Microsoft and you're selling, you know, an insane amount of enterprise software, which they are, and I'm not saying that's going anywhere in the short term, but let's just say in the very long term, you believe that's disruptable, then the question becomes, okay, are they going to keep spending $200 billion on chips? Are they going to afford to be able to do that if their software sales falter? So maybe that's a faint connection to the broader software ecosystem. But yeah, I don't think that I'm not sure that with the current narrative that there's a direct line that we can connect there in terms of connecting the dots. But it is concerning either way. I mean, you don't want to see the market fall apart on that kind of narrative, because that would not be great. But, you know, wow, Viavi is absolutely ripping right now.
By the way, those asking what are those beep sounds, that's Stock Talks Discord. He has a very engaged Discord.
Sorry.
Yeah, look at that, 6%. This is this is quite incredible, dude, because we were together in Vegas having a great time 2 weeks ago, and things were a little different, you know?
They were a little different. Yeah. And I mean, it was a very, very hot start to the year. Honestly, in hindsight, I'm looking back on the start ahead of the year, and I probably should have recognized that probably wasn't normal and taken more profits. But, you know, look, a lot of these things is hindsight is 2020. None of you are going to manage things perfectly. I have not managed this year perfectly by any means. I've made some big mistakes this year in terms of options exposure and what I've held through earnings and all that stuff. I mean, I've had a couple really bad trades this year. So you're not alone. It's not like if you're like a newbie and you feel like, oh, I'm doing shitty, I'm making mistakes. Like, plenty of experienced traders and investors are making mistakes in a market like this because it's so viciously volatile. It's very, very hard to navigate something like that unless you're a day trader, right? Which I imagine most of you in the audience aren't. Most people in my server aren't either. And so if you're not a day trader and you're not cash every day, which is a nice, it's a very liberty thing to be in a market environment like this, right? Like, you're going to have to deal with moments like this, period. Unless you want to be someone who's going to operate like that and just be in cash every single day, which I don't think is really a sustainable investing or trading strategy. In moments like this, you'll feel great, but in bull markets, you won't, right? Where stocks are just going up perpetually like they have been for the last 3 years, because those are the environments where stockholders win. And we've been in that environment for a long time. And I'm not saying we're out of that environment. What I don't want anyone to misunderstand from any of my comments today is I'm saying like it's over. I'm not saying that. I'm saying there are points of caution. There's carnage in momentum. There's historic selling in precious metals, historic. And that's going to lead to deleveraging. It's going to lead to some pods blowing up, some margin calls. That leads to babies being thrown out with the bathwater. You're going to see indiscriminate selling in this market. You have to be okay with that if you're a stockholder. Now, where you should start getting concerned is if we see those weekly breakdowns on the S&P 500, like I pointed out earlier. That's where you should start saying, okay, maybe it is time to take some exposure off the table, put some puts on. But we're not there yet. We're not there yet. Maybe we could be there as soon as tomorrow. We could be there as soon as next week. But I think the best thing to do in this environment is just like take a deep breath, take off some options exposure just so you're not getting whipsawed. You know, maybe take off some lower conviction positions, batten the hatches, if you will, and just be ready to flip bias if necessary. And if the market flips back around next week and continues back up, great, right? But you don't need to hold stuff that you feel uncomfortable holding in this environment. I think that's the major, major takeaway. And that's where a lot of people will lose perspective sort of on what they should or shouldn't be doing.
Last question for you, Stock Talk. Again, thank you for coming on, man. I think it's really important that we had someone like you on today, definitely to help people at least think about how to navigate what's going on right here. You guys can follow him on Twitter. If you are not following him on Twitter, please make sure to. I quite literally think he is one of the only people on X that is navigating the market cycle in any market environment. And he's been doing it for over a decade here. And he's obviously had some really good picks along the way to help build that momentum. What do you think about gold and silver? And are you in this trade? Do you think we're at a late stage capitalism point where these assets are just like how do you think?
I mean, we probably share this in common, but Punjabi people are raised to own gold. So I do own some gold, physical gold. But I don't own any gold in terms of in the markets. I don't own any like GLD or SLV. It's not really a trade I've ever really involved myself in. I'm an individual stock guy mostly, not really a commodity guy, but I do own a decent amount of physical gold. And I guess that sort of acts as a hedge against my market exposure and my net worth, but it's a small portion of my net worth. You know, it's probably, I don't know, 2 to 3% of my net worth. So it's not a huge amount, but it's enough to where, I feel comfortable in an environment where gold goes up and, I feel like I have some hard assets to counteract it a little bit, but no, it's not a big exposure for me. I do pay attention to it because I think that there has been in the last couple of years, this narrative about currency debasement that's emerged. And I think Bitcoin was purported to be the front runner, beneficiary of that trade. And I think in the last 9 or 10 months, the opposite has been true. And I think gold and silver have kind of taken that crown of being the assets to own during the currency debasement trade. So I think if you're worried about currency debasement to any degree, or if you see when Warsh comes into office that he's more dovish than we expected him to be. I do think that that's an excellent long to have at that venture, but at that juncture, sorry. But for me, not right now. I don't have any exposure currently. I know a lot of people bought the dip on SLV on that 30% down day. I don't think that's a particularly bad idea. I don't think buying any asset on a big 30% down day is ever really a bad idea, but not really my type of exposure. Now I'm more of a tech and individual industry focused kind of guy. Actually have a lot of focus on around industrials now with the shipbuilding focus, but I'm more of an individual stock guy. And so for me, that kind of guides my thinking when it comes to all this stuff.
Makes sense. Stock Talk, thank you for being on. Again, his Twitter is right there. You can follow him there. Everyone's saying we got to get you on every week, so we've been busy with Equity Edge, guys. We went to Vegas and all this stuff, and I had the meetup. But Equity Edge will return next week. One ticker that this is what we're gonna do on Equity Edge, SYNA. This is a name that Stock Talk likes. Actually, not in a bloodbath right now, down about 1%. I don't know if you want to give a quick 30-second summary of it, Stock Talk, but we'll do an episode of it.
Yeah, I mean, it's a brand new position for me. I'm not really up on it at all or down on it, kind of flat on it headed into this earnings. I'm up like 1 or 2% on the shares, but I don't really know what's going to happen on the earnings, honestly, in this market environment. Who knows? Maybe it'll be down 10% on earnings, like a bunch of other stuff. But they do have earnings coming up after the bell, so hopefully it goes well. That'll help with some of the drawdowns we've been having. But yeah, I mean, it's been tough earnings reactions so far this year for everything except Viavi, really, for me. That's been the only positive reaction so far. So we'll see what happens. I mean, if it ends up being an earnings report that I don't really love, maybe we'll cover something else next week. But
yeah,
tentative. We'll see. If I like the earnings report, we'll touch on that next week, depending on how that goes. But yeah, that's today after hours. There are some other shipbuilding stocks that I've gotten recently too, so maybe we'll talk about those instead, if not. But yeah, we'll see you guys next week for Equity Edge either way. Keep your hats on. I know it's a tough environment. Trust me, it's tough for me too. It's tough for everyone, I think, these last couple sessions. So don't feel like you're on your own or that like you're the only one messing up. It's definitely a market environment where a lot of people are getting drawdowns. I'm sure Amit himself is in a pretty big drawdown too. I'm sure everyone is. So yeah, it's part of the game. It's part of investing, part of trading. If you want to be in high beta stuff, that's like mid caps and even some of these large caps that are high beta, you have to get used to this. You have to. And you have to be ready for minus 10% days and minus 30% drawdowns from the highs. And that's just part of the game. Like if you're gonna celebrate it on the way up when these stocks are doing nothing and going up 6% a day, you got to be okay with it on the way down too. So manage risk, be smart, monitor your individual stocks, don't be a hero, and yeah, just stay patient and keep an eye on that weekly structure on the S&P 500. I think that's what matters the most right now.
Someone said, Amit, ready to crack a joke. I can sense it. I needed to get a joke to laugh. We need to hear your laugh, bro. People are obsessed with the laugh. Maybe next time we'll get you to laugh.
All right. We'll get more laughs in the next Green Day. Yeah.
Yeah. Green Day. Appreciate it. You guys can follow us Twitter. Thank you, man. I appreciate it a lot.
Take it easy, brother. Yeah, peace.
All right. Hopefully that was helpful for a lot of people. And I think what he's saying makes a lot of sense across the board. I think we agree on most of this stuff around high beta, margin, the sort of paradox of AI being so good it'll kill SaaS, but the AI stock's not benefiting from killing SaaS, the SaaS stuff being oversold. The technical level for Stock Talk is 672 on S&P. And I also do agree with him until you see the S&P lose some core levels, which not a horrible recovery right here at 680. It's hard to say we have to flip bearish. Just because once utilities and defensives and consumer staples start giving out, then everything's giving out. Then high beta is absolutely going to be flushed. But if those hold on, there should be some level of momentum that still upholds the broader market right here. 680 on the S&P. We're just about finished, but I see Evan Spiegel's live. I'm just curious what this guy has to say about Snapchat. So let's take a look at this real quick, and then we'll probably end out the day.
Evan Spiegel, CEO of Snap. Thanks for joining us and having us here at your headquarters this morning. And your revenue did beat expectations, but your user base is actually shrinking. Why should that be a major concern for investors?
Well, thanks so much for joining us, Julia, this morning. I think, what's so exciting about Snapchat, we're now one of the largest and most used internet services in the world. We reach nearly 950 million people, more than 100 million people here in the United States, the substantial majority of which actually use the service every single day. And so while we've grown our user base so quickly over the past 3 years, ARPU, or average revenue per user, hasn't kept pace with that growth. In fact, it's declined over that period of time. And so we've really seen user growth outpace or revenue growth at a time when we've ramped our infrastructure investments and things like more advanced models, which power our recommendation systems. And so last year, we laid out our annual plan for 2026 and this pivot to profitable growth in what I called the crucible moment. Which was really saying that we're going to take a step back, look at how to really focus on the areas and the geographies where we have the largest advertising business, where we have the most monetizable audience, and we're going to focus on investing there. And so as a result of that, we recalibrated our marketing investment around the world. We made changes to our product and changed the cost to serve that product in a lot of different geographies. And we rolled out new direct monetization tools like our memory storage plan. So those are headwinds to user growth in the near term, but we're very excited. We're close to reaching 1 billion people around the world using Snapchat, and so we're very focused on that goal over the long term. But we're taking time to really recalibrate and focus on growing in the most profitable geographies.
But when it comes to your advertising business, your ad revenue grew only 5% in the quarter. Overall, 10% revenue growth, but a lot of that was from these new subscriptions. Ad revenue only growing 5%, while Meta had 24% revenue growth in their fourth quarter. Why are you lagging behind there?
Well, we're undertaking a massive transition in our advertising business. Just a few years ago, our advertising business was primarily concentrated with large customers, especially here in the United States. And we've undertaken an effort to transition to a small and medium customer-driven business with lower funnel objectives. And so through that transition, what we've seen is very high rates of growth in our small medium customer segment, and an active choice to actually restructure our large customer team to reduce the size of that team. And so while we're undertaking this pivot, what you're seeing is very rapid growth in that small and medium customer segment, really being weighed down by the large customer segment, especially here in North America. We see a lot of opportunities to re-accelerate that large customer segment, especially with new products like sponsored snaps and promoted places. But ultimately right now, I think we're going to end up with a much more diversified and resilient base of revenue with small, medium customers.
Well, you, in one way, are going to be getting revenue is AI partnerships. You signed a $400 million deal with Perplexity, but you're not including that revenue from Perplexity in your first quarter guidance. What is the holdup with that rollout?
We haven't agreed on a launch plan yet. They've made some additional requests prior to agreeing to launch. So we're seeing if we can accommodate those. Ultimately, for us, it's incredibly important that this partnership is successful. It's the first one for our AI chatbot platform. And
yeah, nothing there is giving me confidence to be excited about Snapchat. At stock, now 547, down 7.4% on the day. Trump's World Liberty Financial sold 5 million worth of Bitcoin. Verified on chain. Wow. Looks like the crypto president is selling crypto. I mean, this is like, of course, right? Of course this was going to happen. Oh boy. Let's see. We got Amazon after the bell. Maybe that. Oh, we got Iran too after the bell. Iran right there down 5% on the day. A little recovery from the 40s. Nebius at 4.75%. Palantir is 132, up from 128. And then S&P 681. You got some green candles right there. But the majority of the market's obviously still getting hit pretty bad. I mean, the fact that, $5 million is nothing, but the fact that they're selling because they probably have to manage their risk. I mean, across the board, you're probably getting people taking some profits. Fluence is down 30% on the day. Rocket Lab down 5.6% on the day. Novo down 6%. Meta went green at 680. That's a good sign maybe for Amazon and the large caps. Google, I think, is not as bad anymore. Google still down 3%. But obviously still pretty ugly on those earnings. All right, so I'll be back on the close. We will cover all the earnings. I'll be here with Tanner, Jose, and Neil again for Amazon. I ran Amazon, MicroStrategy, Reddit, Fortinet, Roblox, Affirm, Bloom Energy, CleanSpark, Atlassian. Those will be the earnings that we have today. Those will be the earnings that we have today. And yeah, we will see what ends up happening here today. Amazon, that's an important one. I think a lot of us have exposure to it. It's already been hit so hard today and over the past month that I don't know. Are we going below 200? I don't think we need to, but I would be watching out for the CapEx spend. If the CapEx spend is high, obviously, if that's what took Google down, then maybe that could hurt Amazon as well. Yeah, Vitalik also sold a ton of ETH. That happened yesterday. Now look, Vitalik created ETH, so he gets to do whatever he wants. He's also never had this kind of blind loyalty to Ethereum. But I mean, seeing the founder of ETH selling it is not necessarily the best thing in the world to see. What else we got there? Also, the other thing that could affect Amazon, that's correct. If there is an OpenAI headline after hours, I mean, Microsoft's OpenAI RPO, that really messed up, I think, Microsoft's momentum. I mean, if Amazon says, we're going to do 50 billion into OpenAI and this and that, and like, Microsoft back above 400, because maybe Amazon's guide on AWS is contingent, that sort of 22% reacceleration on Oracle, on OpenAI putting a commitment to buy more cloud from Amazon, which means Amazon might have to invest in them to be able to, get the commitment, which is allowing them to guide nicely on cloud. So if the cloud spend is rooted in Oracle or OpenAI, I don't know how the street's going to react to that. ARM is getting hit too. Where is ARM? ARM's actually reversing 7%. It was down 10% yesterday. It's now down 7%. All right, let's do word of the day and we'll get out of here. Again, we'll be back for the close. And keep going from there. Are you going to ask Tom Lee if he will come on your show again? Do you guys want Tom Lee on the show? I can reach out. I mean, I've been thinking of it. I know he's had a busy schedule, but I also know some of you guys are not the happiest with this guy anymore. So it's crazy, right? The flip can be crazy. We're getting a bunch of Basent clips. Oh, let's look at this one right here. Basent's getting grilled right here on, I think this is Trump suing the IRS clip. Let me pull this up. Let's see.
But if the president prevails in this lawsuit, he's going to be able to pocket that money. My question is the president, has anyone in the president's office talked to you about this lawsuit in any regard?
They have not, and the president has said he will donate the proceeds to charity. You may have missed that.
So no one at all has discussed this to you whatsoever?
No, sir, and the president said he will.
Have you received, I didn't ask any more questions. Have you received any advice from Treasury's legal division about how to handle this potential conflict?
This is a Justice Department matter. They represent Treasury in it.
Have someone from the Department of Justice actually come and talk to you saying that this is their purview and you need to stay out of it? Or who has discussed to you what is your role in this?
Our general counsel, who's sitting behind me, has told me that it is a Justice Department matter. The Justice Department defends Treasury in matters like this.
Okay, so it has been discussed with you. Do you have any final say at all in the process of this? Or is the DOJ just going to instruct you to cut a check and or settle, and you have no independence to actually make a decision whether or not the president deserves $10 billion?
Again, that is a DOJ matter.
And so the DOJ will entirely make that decision if and whether or not the president should receive $10 billion. You have no say at all.
Correct.
So you would just have to write the check if you were told to write the check.
Correct.
And you would write the check willingly if you're told by the DOJ to the president.
I will follow the law, Senator.
Good. I mean, I think for me,
10 billion might be going to Trump if this lawsuit comes through. Maybe 5 billion from JP Morgan as well. Honestly, I don't know much about the IRS lawsuit, but kind of crazy for a president to sue his own IRS for $10 billion. I guess it'll be donated to charity. I don't know. I haven't kept up with that, but it would be quite incredible to see if that ends up playing out. All right, word of the day. Antediluvian. Extremely old-fashioned or outdated, belonging to a very ancient time. That business model feels very antediluvian in an AI-first world. I mean, that's pretty ironic because these SaaS names, I guess, are the epitome of antediluvian, which I hope I'm saying right. Let's see. Antediluvian.
Antediluvian.
Pretty close. Pretty damn close.
Antediluvian.
I said T instead of T. Antediluvian. Yeah, I mean, SaaS, I guess, is antediluvian right now in the eyes of the street. And that's how they're pricing in this entire ecosystem right now. All right, folks, we will be back for Amazon earnings. Again, all the big tech companies so far have crushed it. I would imagine Amazon will crush it as well in terms of playing the earnings. Just like Stock Talk said, you got to ask yourself your own risk profile on if you feel there's going to be momentum or there's not going to be momentum and how much you want to ride it. You're seeing that S&P move get rejected right there at 681. There's your red candle. And this happened, like, I think at least 5 times yesterday, where you started to see the V's come in potentially to complete the V shape, and then they get hit. So maybe this red candle goes green over the next couple hours, but 681.54, you got rejected. Now you're back to 680.50, and that's making all the stocks like Palantir go from 132 to 131. Amazon was pushing 226. Now it's at 224. Bitcoin was trying to get above 68, back to 67.80. A lot of this does depend on the broader S&P holding up. All right, we'll be back on the close. We'll cover all the earnings. We'll listen to Amazon. Again, thank you everyone for being here. I echo Stock Talk statements about if you're going to be an investor in high beta names and have all the beauty of the upside, the drawdowns are just as painful, and it's part of the game. It is part of the game of navigating it. And, you know, this is the second day in a row. We're going to see how bad this gets. I think this week has been pretty much the worst week for the markets all year. And now we'll see if some of these earnings can potentially change some of this momentum to the downside. Thank you, everybody. I'll see you guys on the market close for Amazon. Bye, everybody. Have a good one.